sayfadayız şu anda.
Bunlar bize
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Before the event starts, I would like to invite all of the guests, ladies and gentlemen, to make yourself comfortable as the ceremony will begin. Bismillahirrahmanirrahim. Alhamdulillahirabbil alamin. والصلاة والسلام على أشرف الأنبياء والمرسلين وعلى آله وصحبه أجمعين. ربي اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي. Assalamualaikum warahmatullahi wabarakatuh. A very warm welcome to our honorable guests and panels, Professor Dr. Fatih Shawashan, Rector of Sakarya University, Associate Professor Dr. Siti Zubaidah binti Ismail, Deputy Director of Research and Development, Academy of Islamic Studies, University of Malaya, Research Assistant Hakan Aslan, Vice Director ISFAM, International Research and Implementation Center of Islamic Economics and Finance, Sakarya University. Yang berbahagia, Associate Professor Dr. Asma binti Abdul Rahman, Head Department of Shariah and Economics, Academy of Islamic Studies, University of Malaya, lecturers and from Academy of Islamic Studies and Sakarya University, and a very good morning to ladies and gentlemen in this webinar conference. Merhaba, welcome and selamat datang to Islamic Academics Webinar Conference organized by the Department of Shariah and Economics, University of Malaya and Islamic Finance Center, Sakarya University. Before we proceed, let us hear the Quran recitation by Imam of the Hagia Sophia Grand Mosque, Fawruh Mushtuir.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الذين يأكلون الربا لا يقومون إلا كما يقوم الذي يتخبطه الشيطان من المس. ذلك بأنهم قالوا إنما البيع مثل الربا وأحل الله البيع وحرم الربا فمن جاءه موعظة من ربه فانتهى فله ما سلف وأمره إلى الله ومن عاد فأولئك أصحاب النار هم فيها خالدون. يمحق الله الربا ويربي الصدقات والله لا يحب كل كفار أثيم. وعملوا الصالحات وأقاموا الصلاة وآتوا الزكاة لهم أجرهم عند ربهم ولا خوف عليهم ولا هم يحزنون صدق الله العظيم. Gitti mi ki görüntünüz? Yayınlıyorlar mı hala?
Dear honorable guests, ladies and gentlemen, please allow me to brief a little about our webinar today. Today's webinar is a collaboration event between University of Malaya and Sakarya University, also a platform to exchange ideas and endless input about Islamic economic in Turkey and Malaysia. This webinar consists of 3 sessions. Praise to Allah SWT, we have been graced by the chance to gather in this momentous ceremony. Due to unexpected matters, our Director of Academy of Islamic Studies, University of Malaya, Professor Dr. Datin Raihana cannot attend our webinar today. Her speech will be delivered by Associate Professor Dr. Siti Zubaidah binti Ismail. Without further ado, I welcome Associate Professor Dr. Siti Zubaidah binti Ismail, Deputy Director of Research and Development, Academy of Islamic Studies, University of Malaya, to give an opening speech and remarks. Please welcome.
Bismillahirrahmanirrahim. Thank you, Madam Chairperson. Alhamdulillahirabbil alamin wassalatu wassalamu ala asyrafil anbiya'i wal mursalin wa ala alihi wa sahbihi ajma'in. Assalamualaikum warahmatullahi wabarakatuh and marhaba to everybody. The Honorable Professor Dr. Fatih Shavashan, Director of Sakarya University, Associate Professor Dr. Asma Abdul Rahman, my colleague from Department of Sharia and Economics, as well as members of Organizing Committee, both from Sakarya University Research Center for Islamic Economics and Finance and University Malaya, Professor Dr. Mahmud Ashutai from Director of Durham Center for Islamic Economics and Finance, Durham University in United Kingdom. I believe the keynote speaker for today's conference. Seminar presenters, students, and all the participants. Today is a very special day indeed, where we got the opportunity to see the collaboration continuously conducted between Sakarya University and University of Malaya. First of all, I would like to welcome all to the seminar or webinar, we call it nowadays, which sees many presenters and participants. We will be having opportunity to discuss on many related matters to Islamic economics and finance. As we all know, Islamic finance is the most aggressive sector and had witnessed tremendous growth since decades ago at international level, particularly in the Muslim countries. We can see that from time to time, many Muslim countries has offered facilities and products with regards to Islamic finance, banking, money, and all the alternative to the conventional economics that can be seen as based on demands from the consumers at the international level. So I guess this growth and achievement was not solely contributed by the industrial players, but as well as products from the researchers, from the academic institutions and research institutions alike. As academic, we can say that research projects, publications must always be carried out, whether at the domestic level or international level, so as to produce more results and get the scientific outcome, and it will enable everybody to further creating and innovatively produce results in the field of Islamic economics and finance. I think the rigorous efforts has been done so far, and what we are doing today is witnessing the products of those research. We are gathering at the comfort of our room in our country to see the virtual seminar jointly organized by two entities, as mentioned by Madam Moderator, in Malaysia as well as Turkey, in the effort to encourage and promote the knowledge sharing. This is very important, yeah, the knowledge sharing, where we can see that the sharing of knowledge and sharing of the knowledge transfer that can be witnessed throughout this day is an effort, collaborative effort done by the expert presenters with the varieties of themes concerning Islamic finance under the main theme of development of Islamic economics, both in Malaysia and Turkey, in achieving the well-being of the Ummah. So the word of the day is the well-being of Ummah. What more today we are facing with the COVID-19 pandemic, and the world are still trying to combat the pandemic that hit many countries, including Malaysia and Turkey. And so far, the economic sector is the most affected in this situation that has forced many countries to execute or to find out various alternative contingency plans in order to support and stimulate the economic progress. In this situation, Islamic finance and banking is seen as the alternative, and it should play a pivotal role, whether it's a wakaf, whether Islamic financing, as well as other products must be made visible and available to help with the progress of economic system before we could see that the existing conventional system will be restored later on. So this is the opportunity for the area of Islamic banking and finance to flourish, to play its role as the alternative mechanism to the conventional economic system. As we have seen throughout the history, the golden ages in Malaysia and Turkey have seen the development of wakaf system. Even the universities like Sakarya and University Malaya towards nowadays are moving towards being run by the wakaf donation from the society. So this will enable further growth in terms of what we call takaful ijtimai, or mutual collaboration and cooperation from society to society. I hope this webinar is not the last. It's not the last evidence for the collaboration between Sakarya and University of Malaya. I was made to know that Dr. Asma Abdurrahman herself has already been many times to Sakarya University, particularly at ISFAM, to conduct training, research, presentation, and so on. So I hope this activity will be continuing throughout the year, this year, and many, many more years to come. Finally, I would like to congratulate to all for making this webinar a success. It will add definitely to our success story between two institutions. And I also would like to express my gratitude on behalf of University of Malaya's Islamic Academy, Academy of Islamic Studies. I would like to express my gratitude to all members and participants. I can see that there are nearly 100 participants today. So this is a very, very promising and very reputable webinar, we can tell. Yeah. Hopefully everybody will be working together to come up with more good results, more memorable seminar afterwards. I hope our relationship will not end with this event, and pray for the success for the seminar and the future undertakings between both institutions. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh. Thank you.
Terima kasih. Thank you to Associate Professor Dr. Siti Zubaidah binti Ismail for the opening speech. Moving on, I welcome Professor Dr. Fatih Shawasan, Rector of Sakarya University, to deliver his speech. Lutfen buyurun.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullah wa barakatuh. Dear Professor Ismail, Deputy Director of Academy of Islamic Studies of University Malaya, dear Professor Mustafa Çalışır, Head of Research Center of Islamic Economics at Sakarya University, dear colleagues, dear students of Islamic Economics and Finance, ladies and gentlemen. It's a great pleasure for me to welcome you to this webinar organized jointly by Malaya and Sakarya Universities. I would like to extend a special welcome to Dr. Mehmet Asutay, whose contribution to the field of Islamic economics can never be appreciated enough. I know that, as in the case of Sakarya University, he always encourages every work of every institution done in the field and contributes greatly to it. We will be listening to his keynote speech after first two sessions. I am sure that he will lay out some important questions and provide some insight to the matters we are facing. In the three sessions, 6 academics from Malaya University and 6 from Sakarya University will talk about how Islamic economics and its applications here in Turkey and in Malaysia contribute to the well-being of Ummah. Dear colleagues, I would like to briefly talk about the study of Islamic economics and finance at Sakarya University. Sakarya University is one of the leading universities in the field. In fact, it is the first university in Turkey offering formal education in the field. The first master's study in Turkey was initiated in 2012, and first research center was established in the following year. Since then, there have been a few universities offering both graduate and undergraduate programs and establishing research center. We are still one of the best, if not the best university in the field. I'm sorry to say that, but as a country, we were very late in introducing formal education of Islamic economics and finance. Remember, first Islamic Bank or Participation Bank, as we call it in Turkey, was introduced in mid-1980s. That means universities had to wait 30 years to open up the programs. Nevertheless, we have achieved quite a bit since then. I am happy to say that graduate programs attract many young people. Now, it is time to offer the program in English to attract more international students. I believe that one more step in coming years would be having joint graduate and undergraduate programs with some universities in Malaysia and in the Gulf. Dear participants, it is no secret that both Malaysia and Turkey have differences and they have their own strengths and weaknesses with respect to Islamic economics and finance. There are known applications in each country. Some have roots in the history, as in the case of cash waqfs at the time of Ottoman Empire. Some are modern inventions to some extent, such as tekaful. Each application has different levels of success in comparison with the endeavors of Islamic economics. Then it is natural to conclude that we have a lot to learn from each other. I believe that I think almost all of the participants of this webinar believe in what Islamic economics can achieve for the well-being of Muslims in particular and humanity at large. On the other hand, many of us accept that we are far from both developing appropriate and adequate instruments and applying those instruments to meet the needs of humanity. The participation of this webinar, the participants of this webinar will benefit greatly because sharing experiences, talking about differences, and exploring the potential areas of cooperation have been and are always exciting. Dear colleagues, I hope to see you face to face at Sakarya University in different gatherings once this pandemic is over. And I pray to Allah that it will be over soon. I would like to thank you all once again for participating in this webinar. Good day to you all. Have a nice webinar.
Tashakkur Ederim. Thank you very much, Professor Dr. Fatih Shawasan, for the speech. Once again, thank you to Associate Professor Dr. Siti Zubaida and Professor Dr. Fatih Shawasan for their remarkable speech. Proceeding with today's webinar, and without further ado, I would like to invite our first moderator, Dr. Muhammad Zaidi bin Daud, for the first session of our webinar today. Dipersilakan, please welcome.
Okay. Thank you, MC. Ladies and gentlemen, may I have your attention? The presentation is about to begin. Good evening for Malaysian audience and good morning for our fellow colleagues from Turkey. Assalamualaikum warahmatullahi taala wabarakatuh. First of all, I would like to welcome you all to this presentation. In this occasion, we would like to have a presentation from the Department of Sharia and Economics, Academy of Islamic Studies, University of Malaya, and Islamic Economics and Finance Center, Sakarya University, Turkey. Okay, before the presentation begins, allow us to short introduce the presenter for this first session. The presenters for the first session are Mr. Hakan Aslan from Sakarya University, Associate Professor Dr. Asma Abdul Rahman from University of Malaya, Dr. Mujahi Ozlimi, Sakarya University, and last but not least, Mr. Azizi Cik Seman from University of Malaya. Please keep in mind, your presentation only 50 minutes, keeping your presentation within the limit. Without further ado, I would like to welcome our first presenter, Mr. Hakan Aslan, and the topic presentation, Takaful Market in Turkey, a promising sector in Islamic finance industry.
Assalamu alaikum. Dr. Zaidi, thank you for inviting. Let me. Okay. I would like to thank for all the participants and the organizers and our speakers and our honorable guests from the University of Malaya and Sakarya University. I'm working in the Sakarya University and my research area is mainly Islamic finance and especially in Takaful. Today I'm talking about the Takaful market in Turkey, and firstly I will provide, because due to time limitation, as our moderator mentioned, so I will try to be as quick as possible. First, I will mention about the just brief history of the Takaful the market in Turkey. Then I will elaborate Takaful market development and compare with the conventional insurance, and also compare with the Islamic banks and why it's promising sector. Takaful market started its business around 10 years ago. As in the beginning of the director mentioned, Islamic financial institutions has around 35-40 years background. However, Takaful is relatively very new. And if we compare with the Malaysia, Malaysia also started the Islamic financial institutions around mid of the 80s. But they started with the Takaful operations as well. However, Takaful started in Turkey very late. And considering Turkey is the dominant Muslim population and its strong economic background, so it's also giving promise for the Takaful sector. On the other hand, development of Takaful is growth of the Takaful market is much faster than that. Okay, I think it's no problem. So I think some minor technical issues, but I'll continue. So that, as we know, there are two types of the insurance business operations in Turkey. There, in general, there's general non-life insurance and life insurance, which is called actually family Takaful. So under the family Takaful companies in Turkey, it's actually divided. Also, there are continuing their operations with a private pension system. Why I want to mention a private pension system in my presentation to make our colleagues from Malaysia to understand Turkish system better, because private pension system is more featured by the government and giving some tax incentives. It's more used by the customers for investment purpose. In contrast to Malaysia, Malaysia is actually growing with the family takaful business more, but Turkey is the normally non-life and the general takaful operations are leading the market. So why it's not life insurance, or in other words, like family takaful business are not developing well? Because mainly the family takaful operations are just going to, they are using for education and credit insurances. Also, the tax incentives for the family takaful and life insurance business in Turkey is not as high as the private pension system. That's why if any customer willing to do investments, so they are joining the private pension system. On the other hand, private pension system in Turkey, it's compulsory, partly compulsory. If you're working in any government institution or private institution, more than 10 people, they need to apply, register you for the private pension system. That's why it has more people registered to private pension system. So if you look at brief history of the takaful operations in Turkey, it started with the Nova Insurance Company in 2010. Then 2013, the first family takaful operation started. Then in 2015, Doha Cooperative Insurance, they offered as a window, it was the first window practices in Turkey. Then in 2016, the government state-owned insurance company, Ziraat Sigorta, which is the biggest in the market, they entered to market as well to offer takaful windows. So before 2017, there's one important point I want to mention. There was no regulation, no law, nothing before 2017. So all these operations was based on the trust. So this operators was saying that we are working based on the interest-free, or we are adopting takaful principles in our operations, but there was no regulation to audit them. It was totally based on the trust. And in 2017, end of the 2017, the first regulation for takaful issued in the end of the 2017, and there were some good points and some bad points in this regulation. So the regulation, it was actually, in my opinion, it was the first and the most comprehensive regulation for Islamic financial institutions in Turkey, because it was described all the required theoretical framework for the takaful. It defined all the definition of tabarru, ta'awun, but they didn't use the word like tabarru, ta'awun, they use other terminology, but the meaning was there, the structure was there. Also, they defined all the models like mudaraba, wakala, and the hybrid models in the regulation. And also the advisory committee, or in other words, that we use Sharia committee in the Islamic banks and all Islamic financial institution. It was the first time in Turkey it's mentioned in this regulation that the takaful operator needs to establish advisory committees. They didn't use, they used the name advisory committee. I want to point out that because I will mention why and what's missing there. And also they limited window operations. They were planning to, the governmental institutions were planning to go to full-fledged practices, but there was some missing points there. They planned for the advisory committee, or in other words, Sharia committee, but they didn't define any qualification for the advisory committee. So we saw that after this regulation, some insurance companies, they operated window operations and they established advisory committee, but their qualifications wasn't there. They didn't have any Sharia background, any fiqh background. They were just managers in the insurance companies, and they become the member of the advisory committee. So there was very missing point in terms of Sharia governance in Turkey. And there's no penalty. Still, there's no penalty if you don't follow the rules and regulations in terms of Sharia. Like you say, you're following the rules, principles of takaful, but you're not following, but there's no penalty for that. And on the other hand, there's no central Sharia board, the audit advisory committees. This is not only for the takaful, it's valid for all Islamic financial institutions. So when we make the closer look to the takaful markets in last 5 years, we can see the figure in the middle, the takaful market within 5 years, it's growing rapidly, and it's already has the 5% from the market share. Why this is important? Because when we look at the Islamic banks in Turkey, which we call participation banks, also I want to indicate that we call takaful companies in Turkey participation insurance companies. Islamic banks in Turkey, even their 35 years background, they only have the 5% market share. But takaful companies reach this number within a very short period. So this is the one of the first significant indicator that show us that takaful has very strong promise in the future. And we can see normally, as I mentioned at the beginning of my presentation, general takaful or non-life insurance business leading the market. And currently, share of the takaful operations are around 5%. And at the end of the 2019, it's reached around 3.5 billion Turkish liras. So when we get the closer look, because I think due to time limits, I think we have a couple of minutes, so I don't want to go too much detail, but currently we have 12 takaful operators. So as I showed you in the beginning, there was just a few companies was offering takaful operations, but currently there are 12 companies that offering takaful operations in the family and general business. And these are the detailed numbers for the operators. I don't want to go over them one by one, just want to indicate that as general operations are leading the market. And there's also one significant point, the first two companies already having the 80% of the market share. So other markets, besides Neoa and Bereket insurance company, the other insurance companies actually just following the window operations. Maybe this is the why they are relatively, comparatively very low in number. Also, maybe these companies are following the full-fledged, maybe has more trust for the customers. When we get closer look to their operations, like what kind of structure, what kind of models they're adopting, mainly wakala and the wakala and the combination of wakala mudaraba model, which is hybrid model adopted in Turkey. And these are the rates and their wakala fee charges for the market. As you know, according to IFRS standards, the takaful operator to take surplus share is not allowed. So Turkey is, even though it didn't mention in the regulation, so they are following the IFRS standards. So the share from the surplus for the takaful operators are not allowed. That causes, as you see, the very high rates for the wakala fee in advance. So as you see, there are two full-fledged life and two full-fledged non-life insurance companies offering takaful business currently. And so I want to remind again, there's one important missing link in the Islamic financial architecture of the Turkey. There is a Sharia governance. Sharia governance is missing. There's no central Sharia board for any operations. But I want to indicate just one small point. They are currently under the Participation Bank Association. There's a one, they established the central Sharia board for the participation banks, but till now, they didn't mention anything for the takaful operations. So there's no central Sharia board for takaful operators as well. So also this currently there's no Sharia auditing by regulation. It's willingly operations are going maybe since beginning of the operations. However, it's not regular by regulation. It's not obligatory. So this is one important missing point in Turkish takaful operations. So I want to conclude my presentation. So as we see, like takaful operators reach 5% within a very short period of time. And also I mentioned the private pension system in Turkey. It was obligatory. When they join the system, when you first open your screen for to see your account, they are asking you one question, just one simple question. You want your funds to be utilized in the interest-based investment products or non-interest based. So there's just one simple choice. So at 63% of the people has chosen interest-free. This is another important indicator for Turkey. That so there is if people they directly ask, do you want riba or not? When they ask directly for this question, so they mention that we don't want riba, 63%. This is quite high percentage when we compare this number with the Islamic banks and Islamic insurance market share. So this gives very big promise for Turkey in the future. And also there's a increasing number of takaful operators. So this is, I think, my end of my presentation. So we see there are several indicators showing that takaful has a big way to go in the future. I want to thank for all the participants for listening. I want to have any questions and comments. Thank you.
Okay, thank you, Mr. Hakan, for your brief and interesting presentation regarding on how the development on takaful market in Turkey. So I hope the audience can understand the position of market on takaful in Turkey right now. Okay, regarding on the question, maybe for the question we open to after the last all the presenter present their point. Okay, Mr. Hakan.
Yes, thank you very much, Madam.
Thank you so much, Mr. Hakan, for the in time presentation because you already have a 4 minute left. Okay, thank you, Mr. Hakan.
You're welcome. So I think our presenters have more time for.
Yeah. Okay. Now I invite the second presenter, Associate Professor Dr. Asma Abdurrahman, to present the establishment of National Takaful Wakaf Fund in financing pandemic and exploratory study. So, Associate Professor Dr. Asma, the floor is yours.
Assalamualaikum warahmatullahi taala wabarakatuh. Can everybody listen to my voice? Can you hear my voice?
Yeah, Dr. Asma.
Okay, thank you. Okay, so thank you, Dr. Zaidi, the moderator for the first session, the distinguished presenters, ladies and gentlemen. So today, I will be presenting our research, which is funded by University of Malaya's special research grant for COVID-19. So this research is about the establishment of a national takaful wakaf fund in financing pandemic and exploratory study. Okay, so we put here as exploratory study because this study is still ongoing. So what I will be sharing today is the initial result or the initial funding of our research. Okay, so what is the motivation for this research? This research is based on the COVID-19 incident, which is all of us are impacted, and especially I think in all over the world when many of the governments have make a policy whereby the movement control order has been put in place. So in Malaysia, there are many stages on the movement control order, which is started by National Movement Control Order and then followed by Enhanced Movement Control Order and then semi-enhanced and then conditional and then Recovery Movement Control Order. So all of these movement control order have an impact, okay, which is constrain the daily activities of the people and the business and thus affecting their income, okay. So as we know that when it affecting their income, then the government also has put a measure, okay, to mitigate on this by introducing the Prihatin Rakyat Economic Stimulus Package in Malaysia, which is nearly 250 billion ringgit. Okay, I'm not sure. Maybe in lira, nearly the like quite similar amount. Okay, so I would say like nearly 250 billion lira, nearly more or less. Okay, and this economic stimulus package is expected to ease the burden of the people and the business community, okay, which is to protect the welfare for the people and supporting business, including small and medium enterprises, and also to strengthen the economy. So what this is what are the initiative that have been done, and the most and the biggest allocation, which is nearly 100 million, is for financial assistance for those who are infected and eligible, okay, to get that as financial assistance, okay. And other than that, in terms of getting more funding for Malaysian government, the Malaysian government has introduced a Sukuk Prihatin, okay, and this is part of the National Economic Recovery Plan, which has been announced by the government, okay, and which have the National Economic Recovery Plan have three objectives, which is to empower the people, business, and also to strengthen the economy. And by issuing the Sukuk Prihatin, which is expected to get more fund, okay, to reduce the economic impact to the society, okay, and based on the speech that's been delivered by the Prime Minister, okay, the motivation for the government, okay, to issue this Sukuk Prihatin is because of there are positive response from the public, okay, to participate and contribute to the rebuilding of the nation post COVID-19. So there was contribution, there was a request from the people themselves, which is they also want to contribute, okay. So in terms of the Sukuk, which was issued nearly 500 million ringgit, and when it was being open for subscription, there was overly subscribed, whereby there are 666 million subscription from the Malaysians, and the government then agreed to issue that amount, okay. And what are the features of the Sukuk Prihatin? Okay, so I will share with you certain features of this Sukuk Prihatin, because this is not the main focus of my presentation, but just to give you an idea of what happened in Malaysia in terms of getting funding for financing the recovery post COVID-19 or during this COVID-19. Okay, so the issuance of the Sukuk Prihatin is by the Malaysian government, and the utilization of the proceed is for funding for the economic stimulus package and also for the recovery plan, okay. And then Um, in terms of the subscription period, in only between 18 August until 17 September, and it being issued in 22nd September this year. And it used the Islamic principle of commodity murabahah via tawarruk. And the tenure for the suku is only 2 years, which will be measured on 22nd September 2022. And who are the targeting investor for this suku issuance? So it is targeted for eligible Malaysians, individual and corporate. So it not only for the corporates like the corporate suku, but also for Malaysians. So this is also one of the retail suku. And the investor are also will be given the profit return, which is 2% from their investment or from their sukuk holders. And in terms of the minimum and maximum, so they can invest at minimum of 500 ringgit. And the redemption of this sukuk will be credited to the sukuk holders. Okay, and then in terms of the tax treatment, okay, so for the eligible or the individual person, they will get the tax exempted. Okay, so I think this is something which is also like encouraged for the investor when they get the tax exempted. And in terms of the feature, okay, sorry, there is another feature that I would like to mention, which is sorry. Sorry. Okay, so in terms of the option to waive principal on maturity date, okay, so if we see that these features in this sukuk whereby the sukuk holders may waive the principal amount, okay, in part or partial on the maturity date, okay, as a contribution to the government. Okay, so when we see these features, so this is the element of like people or the sukuk holders may want to make their investment as a donation to the government. Okay, so then this is one of the way of the government getting fund in funding the economic recovery process due to the pandemic. So what lesson can be learned here is this, okay? What is the financial preparation at the national level to mitigate such pandemic in the future? So is there a possibility that pandemic will occur in the future? So we are not sure and we never expected that this surge of COVID-19 will occur and impact globally and locally and especially at individual level. So based on the historical evidence, we can see that previously there are many pandemic that occur in the history and starting even in 165 AD. Okay, and this is among the biggest pandemic that have big impact to the community. So what should be done in the future if this such pandemic happen? Do we want to take this step whereby we wait and see if this such pandemic happen, then we will find a way to get funding, or should we have a mitigating risk by preparing something as a mitigation the financial need when this such pandemic happen in the future. So that's why in our research we try to suggest that at the national level, the government should prepare a fund which is based on the wakaf and takaful. Why we propose this principle to be implemented? Because of the features of wakaf, which is perpetual, and also it is for donation, and then also based on takaful, which is only be used, okay, during the certain risk that occurs or misfortune occurred. Okay, so with the combination of this, then we are proposing this type of funding, okay, by establishment of National Takaful Wakaf Fund. Maybe in any part of the world, if there are the willpower from the government to implement such wakaf fund, okay. So this is what we are trying to suggest on the basic level at this juncture, like I mentioned, because our research is still at the inception. So maybe the donors can contribute to the Takaful Wakaf Fund, and then this Takaful Wakaf Fund should be invested, and then the return will be put back in the Takaful Wakaf Fund, and it only can be used for the pandemic that might happen. So we are not sure either pandemic will happen after 2 years, 10 years, 100 years, or 50 years. We are not sure. But by having this kind of fund, we are quite comfort, so that the government are very confident to face such unexpected pandemic that might happen in the future. So we did pilot survey. So this is not to reflect all the Malaysians, because it involved a very small respondents, because this is only pilot survey. So after this, we will spread our questionnaire to the Malaysians. So for our pilot survey, which is the finding that we get, okay, based on our research, which is to seek the Malaysians' opinion. What are their opinion if we or the government agree or want to set up this kind of fund? Okay, so in terms of knowledge, we can see that Malaysians they are not quite aware or know about the previous pandemic that happened in the past. Okay, but in terms of the latest pandemic like Asian flu, okay, so these are, or avian flu, so these are in their knowledge. And in terms of their readiness or willingness to contribute to the fund, okay, this is small respondent, okay, but based on this small respondent for this pilot study, so majority will say yes, but small respondents say no. And the reason why they don't want to contribute, because of one of their response is that they don't think that pandemic may, they think that pandemic may not or happen in the future. Yes, we are not sure, but based on the previous evidence, we see that it might happen in the future. Okay, it cannot be predicted, but it might be happen. And then another perception is that the responsibility should be put on the government, not the people. Okay. Or another opinion is that only high income earners should contribute to the fund. And then another is I do not have financial capability to contribute. So even though all the respondents that participate in this research, we choose those who are working and have income. And a second, on what will be the amount that they are willing to contribute. So majority would say that less than 50 ringgit. Okay, 50 ringgit, nearly more or less like 50 lira. Okay, so
Dr. Sorry, you have 2 minutes more left.
okay, thank you, Dr. Zaidi. I will end my presentation. Okay. And then the next question is about mode of contribution. So if they want to contribute, what will be their mode of contribution? So majority would say that anytime, and then 35% would say annually and also monthly. Okay. And in terms of their suggestion, there are also suggestions that suggesting that the government actually should establish this kind of wakaf fund long time ago, which is to help, okay, to mitigate any economic instability or economic need, okay, which the fund is there, okay. So, but again, like I mentioned, this is only our initial study. We are going to get more information from the Malaysians. We will distribute more questionnaires after this because this involve very small respondents. Okay. And in the detail of our questionnaire, we actually have many other construct which we also have test the liability, which is most of the construct are meeting the requirement in terms of the reliability of the construct that we have developed. So I think I will end my presentation here, and thank you very much for your attention. And I would like to entertain if there are any questions or suggestions which is to improve our research after this. Thank you very much, Dr. Zaidi.
Okay, thank you so much, Associate Professor Dr. Asma binti Abdul Rahman, for the interesting exploratory study has been done by Dr. Asma and team regarding on the takaful, the establishment of National Wakaf, Takaful Wakaf during pandemic. I think this is very important to empower for the economy among the society in Malaysia or other countries. So without further ado, I invite for the next presenter, Dr. Mujahi Ozdemir. For the next presentation, 35 years of Islamic banking in Turkey reach full potential or long way to go. So the floor is yours, Dr. Mujahi.
Thank you very much, moderator. Assalamu alaikum. Can you hear the presentation?
Yeah, I'm here.
Everything is okay? Okay.
Yep.
Bismillahirrahmanirrahim. Inshallah, in my presentation, I will briefly give you an overview about Islamic banking in Turkey. I think we can get very important experiences from Malaysian side. So at the end of the presentation, I will be happy to get your comments, recommendation, especially pointing the Malaysian experience. First of all, when we have to say that when the Islamic banking in Turkey started, yes, normally institutionally, like other Islamic banks in the world, the first Islamic banks in Turkey, it was called Special Finance Houses, was established in 1985. But before that, there are some attempts in Turkey to introduce especially profit and loss sharing type of banking, whether they didn't call it Islamic bank or other references to the Islam. There are some attempts in 1970s. But when we go back to the last years of the Ottoman time, we see that in 1913, there's a Adapazarı İslam Ticaret Bankası was established in Sakarya. This institution, this type of bank is very important, but I will not give about more detail because time and issue, but it is unique in the global world. When we consider the Islamic banking history, we generally start it 1963 by the establishment of Mitgamp and also Tabung Hac, of course. But this bank was established in 1913 in Sakarya, and it has Islam and bank in its name. But in modern Turkey, we are starting the Islamic banking in 1985. The first years of the, not first year, until the 2005, these Islamic banks were called as special finance houses. After 2005, with the new legislation of new banking law, the name of these institutions was converted to participation bank, and this name refers to the profit and loss sharing structure of those institutions. But when you see from the name of this institution and look to the history of the first years of these special finance houses, we can see that the growth performance of the Islamic Bank, or total share of Islamic Bank in Turkey, is closely correlated with the political structure on those days. Until 2000s, at the early of 2000s, total share of these institutions was around 1%. Today, it is around 6 or 7%. And I can give you as a reference, for example, yes, Tabung Hash, the history of Tabung Hash goes back to the 1960s, but in the literature, we see that the first Islamic banks in Malaysia was established in 1980s, similar to the Turkey. But today's Malaysian Islamic bank share in Malaysia is around 40%, but when we compare to Turkey, Turkey is far behind these shares, and it is around 6 or 7% recently. But Turkey's market share target is 15%. To reach this target by 2025. And your comments about comparison between Malaysia and Turkey is very important in that point, and collaboration between, at least in academic area, between Sakarya and Malaya University is very important. You can see the Islamic banks in Turkey. There are 6 Islamic banks operate in Turkey, 3 of which are state-owned. They were recently established since 2015. The government would like to accelerate the growth performance of Islamic Bank and to reach the 15% market share target. And the biggest Islamic bank in Turkey is Kuwait Türk Participation Bank. Although Al Baraka Türk is the first bank in Turkey established in 2085, but it is now in the 3rd place. And you see that Ziraat Participation Bank, Vakıf Participation Bank, and Türkiye Emlak Participation Bank, all of them are state-owned, but we should maybe give more information about Vakıf Participation, because it is very important to bridge between historical cash Vakf or Vakf to the modern Islamic banking practices. The shareholder, around I think 99% of the shares of Vakıf Participation Banks belongs to the General Directory of Vakf Turkey. So it is very significant example to compose a bridge between history and modern Islamic banking practices. And you can see here that a general picture of the sector as of 3rd quarter of 2020. And in Turkey, there are 3 types of banks operate, 2 of which are based on interest, but only one group, participation banks, are operating in Sharia compliant. We are calling them participation bank. In general, we can refer it Islamic banks. Deposit banks has the main share in total banking, and development and investment banks have similar shares with participation banks. There are around 52 banks operate in Turkey. You can see here in general picture market share of the Islamic banks compared to the deposit bank and development and investment banks. You see that total share of assets of Islamic banks is around 7%, and collected funds deposit it's around 9%, and credit funds allocated it is around 6.5%. I will give more detail about historical figures in the next slides. This is important to understand how the development phase is going in terms of Islamic banking. In terms of total assets, you see that recent years, especially since the 2017, there is a significant growth in total share of Islamic banks. It can be attributed to the effect of the state-owned participation bank, I think. But it is still far away from the 15% market share. But growth rate recently is very promising. Also, when we analyze, when we understand the performance of the banks, we have to look two sides. One of them is financing. It is very important for Islamic banks because it aims to finance the real sector. On the other hand, collected funds, deposits. How many deposits they are collecting from the deposit holders based on the Qard Al Hassan current accounts and participation accounts, investment accounts. You see, there's a difference. When we look to the financing side, total share of Islamic participation banks in Turkey is around 6%. On the other hand, in terms of collected funds, deposit, it is around over the 9%. So it shows us that there are people are keen on to invest their funds to the Islamic banks. I think it is because of the sensitiveness on interest. But on the other hand, financing side, the share of participation banks is compared to the deposit side is lower because there is a very big competition here. And I think people are looking for the cost, how much cost the bank or Islamic bank put on their credits. So Islamic banks should be more focused on be competitive and also introduce new products to attract more people from the other conventional banks. On the other hand, there are 2 points important for the growth of the Islamic bank in Turkey. One of them is branch network. I will give you at the end of my presentation, I will give you a map of Turkey, which shows the cities of the Turkey and how many Islamic banks have branch on those cities. Right-hand side, equity is very important because these Islamic banks has to finance the real sector. Yes, they can invest some of their portfolio to the sukuk and other securities, but their main operation is financing the real sector. So when they finance the real sector, even it is based on the main murabaha, 90%, over 90% is murabaha, they get some risk. So it affects their capital adequacy ratio. In order to grow and increase their market share, they have to, the main shareholders has to inject equity to Islamic bank in order to comply with the threshold in terms of capital adequacy ratio. So you can see here, when we compare the Islamic bank in Turkey to the conventional banks in terms of equity, you see that they have a share below the 5%. So it shows us that these institutions or the shareholders of these institutions should inject equity to these institutions, these Islamic banks, in order to reach their target. It is a very important point. We can see that 3 of the all private Islamic banks in Turkey are belong to the 2 of them Saudi Arabian, and 1 of them is Kuwait-based Islamic banking group, and the other 3 are state-owned. And in the future, I think for Vakıf Bank, the state would like to inject some capital. So in near future, we can see this market share will increase. Some recommendation is important, I think. One, first of all, I have to mention that in general Islamic banking literature, we see that there are some criticism towards these institutions. All those criticism, except tawarruk, is even tawarruk in recently some Islamic banks are using tawarruk, are valid for Islamic banks in Turkey. Some recommendation we can put here, as Hakan Hocam also mentioned, the regulation is very important to increase share of the participation banking or to reach more people in a Sharia compliant way. But we have to consider the overall Islamic finance architecture, including takaful and other non-banking institutions, because they are so integrated to each other. For this reason, government or other legislative bodies should consider the overall Islamic finance architecture in Turkey and introduce comprehensive regulations towards these all institutions. Secondly, there are very practical solutions. For instance, double tax issue for murabaha transactions of Islamic banks. It's a problem in Turkey. If it is solved in the future, I think it will help to accelerate the growth of the Islamic banking and to help to be contribute to the image of this institution into the society, And also, it is general criticism towards Islamic banks in all global banking sector. They have to focus on more profit and loss sharing products rather than debt-based products such as murabaha. And recently, there is a good point. For example, Al Baraka Turk Kuwait Finance House, they are introducing some technology-based programs. It's called in Al Baraka Garage and Lonja in Kuwait. They are very important. And in the future, with the help of the fintech, I think Islamic banks will introduce more profit and loss sharing based financing products. And fourthly, innovative solutions should be introduced to specific segment. I see this point is very important. For example, government establishes Ziraat Katılım Bankası, so we can see its name Ziraat Agriculture. So those institutions, those state-owned Islamic banks should focus on specific area. We can see some examples of these special banking models in some countries. So Ziraat Katılım especially should target the agriculture segment and other institutions. For example, Vakıf Katılım should focus on more micro enterprises and others. And another one is, yes, we are always looking, even now, I say to you that the target of the target is to reach the 15% share of Islamic Bank in terms of total assets. Yes, we have to put this KPI in front of us, but also we should add them to how many people the Islamic banks reach. In microfinance, it's called outreach, and there are some components, breadth and depth. So we have to push Islamic banks to introduce microfinance type products and other things. For example, Bangladesh Islamic Bank is a very good example. How can we integrate microfinance to the Islamic bank's main operation? So Islamic banks, yes, they have to target the growth, asset growth, and other things, but also they should focus on outreach. And
okay, Dr. Mujahid, 1 more minute left.
Okay, inshallah, I will finish. And other one is they have to target, yes, traditionally, this Islamic bank should focus on also younger generation. 30 million of Turkish population is around 15 and 24 years old. They have to focus on that segment, and they should use, they have to increase the financial literacy, especially in this target segment. Collaboration between universities are very important. Our rectorate also mentioned about it. And the last one, you can see here a map of Turkey. You see that still in some cities in Turkey, red one, there are, I think it is around 5. It was the end of the 2019. There are still in those cities, there is no any Islamic bank operate. For example, when you live in those cities and you would like to get financing, or you would like to deposit your money in a Sharia compliant way, but you couldn't find any Islamic bank in your city. So it is very important point. Yes, we know branchless banking, it's a future trend, but in the short run, in Turkey, generally people would like to use traditional models. So Islamic Bank should focus on to expand their branch network. Thank you.
Okay, thank you, Dr. Mujahid, for the informative presentation regarding on the Islamic banking in Turkey since 1995, if I'm not mistaken. For sure, since that period, since 1995, lots of growth and positive development happened in Turkey regarding on Islamic banking sector. Okay, thank you again to Dr. Mujahid for the presentation. And last but not least, I invite Mr. Azizi Cik Seman from University of Malaya for the presentation Ar-Rahnu in Islamic Banking Institution, from Qadru based to sale based and analysis from Sharia perspective. The floor is yours, Mr. Azizi.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Can you hear me?
Yeah, Doctor.
Okay, thank you. Thank you, Dr. Zaidi, fellow presenters, ladies and gentlemen. My presentation is about one area that is probably beneficial in microfinancing, namely Ar-Rahnu. My paper would be Ar-Rahnu in Islamic banking institutions, from thought-based to sale-based and analysis from Sharia perspective. It's going to be a short presentation, and this is the outline of my presentation. Started with the concept of Ar-Rahnu in Malaysia, in historical background, microfinancing using Ar-Rahnu in Islamic banks from Qard to Tawarruk. We have SAC or Sharia Advisory Council of PNM's ruling, which affects the way of offering Ar-Rahnu products by the Islamic banks. Then I'll talk about the alternative to Qard, which is currently Tawarruk used by the banks involved. Tawarruk financing, the basic structure, and Ar-Rahnu Tawarruk in Islamic bank as an example. Okay, a very short introduction of Ar-Rahnu. It is based on Ar-Rahnu itself. Is maybe I can say it is a product based on the concept or the contract or akad Ar-Rahn, pledge contract. It is a contract whereby a party as a pledgor or rahin pledge an asset as collateral or marhun to another party known as a pledgee or murtahin to fulfill an liability or obligation known as marhun bihi, owing to the pledgee in the event of default of such obligor. I quote this definition from the policy documents of Ar-Rahn from Bank Negara Malaysia. Basic Rahnu agreement or arrangement. We have number one, a customer or rahin or the debtor get loan from the murtahin or the creditor. Yeah, that's step number one. It can be loan, it can be debt, either the general form of debt or a very specific form of loan. To secure that debt, he will pledge the asset, not necessarily amounting to the same amount of the debt or the loan, but usually it will be more expensive or valued at more than the value of the loan or debt. Third, the customer or the debtor will pay the loan or debt, and in the end, after the loan has been repaid, the debt has been settled, the pledgee or murtahin will return the asset to the rahin. That's the classic or the basic rahan arrangement, and it can be applied in various types of indebtedness that arise between the Rahin and Murtahin, or the debtor and creditor. In terms of practical applications, we have additional steps. Okay? Prior to this, we have 1, 2, 3, 4. This one we have 2 additional steps, which are, number 1 is the same, customer getting loan from the Murtahin. Customer number 2, customer pledge his or her asset to the Murtahin. Okay, number 3 is new here. Okay? If we can go back to the original Rahan agreement, initially Rahan agreement, if it is based on loan, then the creditor cannot claim anything more than the amount of the loan. Okay? For example, if the customer borrow 100 ringgit or 1,000 ringgit from the pledgee or the creditor, then the only amount that he is supposed to pay is that 100 or 1,000 ringgit, no more, no less. But yes, he or she can pay more if it is not contractual, but that's out of our discussion here. But if you want to have this kind of arrangement in a business settings, then it is not going to be a viable business, because the creditor will give loan or will lend the money to the customer without any additional amount, because if you charge additional amount, then it's going to be riba, which is currently and was done in the conventional pawnbroking business. Okay, going to the third step. The third step is number 3 and number 4 is actually where the Murtahin gets the profit. If in conventional settings, the pledgee or the Murtahin or the creditor give the money to the Rahin or the debtor as a loan and charge the an interest on top of the loan amount, which cannot be done in the Islamic settings, then the alternative that has been applied throughout the years were the Murtahin will charge safekeeping fee for the marhun to be kept at the Murtahin's place. Okay, that's the way that has been applied and been practiced in order for the pledgee or the Murtahin get additional amount on top of the original loan, and it is considered as Sharia compliant. Okay? The rest, number 5 and number 6, is just the number 3 and number 4 in the previous slide. Okay, the problem here is this one. Okay, the safekeeping fee and the safekeeping fee or the charging of ujrah. It is the problem that has been discussed, that I will tackle, or I will look into in the coming slides. Okay, a brief historical background of Ar-Rahnu in Malaysia. Ar-Rahnu in Malaysia, in their settings, in the settings of Ar-Rahnu or official Ar-Rahnu outlet, started since 1990s in Kelantan State, Terengganu, by Yayasan Pembangunan Ekonomi Islam Malaysia or YAPIM, Koperasi Bank Rakyat with YAPIM, all in the 90s. And for the Islamic banks, they started later than that. And currently we have 5 banks or Islamic banks offering Ar-Rahnu product. Bank Rakyat, Agro Bank, Bank Islam Malaysia Berhad or BIMB, Bank Muamalat Malaysia Berhad, and Afin Islamic Bank. Okay. Microfinancing via Ar-Rahnu. The economic impact of Ar-Rahnu is actually in the simplicity of getting loan using Ar-Rahnu contract. Okay. So I put it here as financial inclusion, because through Ar-Rahnu you can realize the aspiration of banking the unbanked, or in our term microfinancing, which provides resources and access to capital to the financially undeserved, such as those who are unable to get loan or financing from traditional banks. Because if you want to have, or you want to obtain loan or financing from traditional banks, there are numerous or numbers of steps or numbers of requirements that have to be fulfilled in order for the financing is to be if you want to get the financing. Okay, but okay, it is subject to standard banking criteria, i.e. creditworthiness, and Ar-Rahnu provides a venue and alternative for those who needs immediate cash without the hassle of credit assessment by the banks. In reality or in practice, we have in some states, for example, in Kelantan, yeah, a businessman or businesswoman there use Ar-Rahnu financing for quick or immediate cash. Or for example, they want to get cash in the morning for their business during that day. They just go to Ar-Rahnu outlet, pledge or let out the jewelry for let's say 1,000 or 2,000 ringgit for that day, and later in the evening or in the afternoon they get the jewelry back and pay that 1,000 based on or according to the pre-agreed safekeeping fee that has been agreed upon or agreed before. In the context of Islamic banks, actually, Ar-Rahnu activities are governed by Pawnbrokers Act 1972. However, Islamic banks or IB, I put it here, are subjected not only to that act, but also to Islamic Financial Services Act, IFSA 2013, and other guidelines or policies of BNM. And the catch is here, BNM's policy document on Ar-Rahnu issued 18th of July 2018 with effective date of 1st August 2019, and ruling of Sharia Advisory Council of BNM, which I state here in the 194th meeting on 25th June 2019 and 195th meeting on 31st July 2019, Ar-Rahnu product structure offered by Islamic Financial Institution or IFI through the combinations of bulk or loan, rahan, pledge, wadi'ah, safekeeping, and ujrah or fee does not fulfill the Sharia requirements in rahan policy document. It's quite shocking during that time, and the banks involved have to look into that issue seriously and find another way of offering or providing Ar-Rahnu financing. The justification given because of the interconditionality and interdependency between the loan contract and the elements of pledge, safekeeping, and fee in the product structure, which give rise to qard jarra naf'an or bank wasalah. And the combination between the pledge and the loan contract in the Ar-Rahnu structure for the purpose of profit generation is not in line with the objective of both contracts or muqtadal aqd, in which the former is for pledging while the latter is for charity. And the ruling was regarding prohibition of Ar-Rahnu based on the above structure will take effect on 1st February 2020, just a few months back, and IFIs are temporarily allowed to apply the views of their respective Sharia committee on the Ar-Rahnu product structure up until the date of the SAC ruling coming into effect, which was on 1st February. And any new and outstanding Ar-Rahnu financing, including the income generated before the above SAC ruling takes effect, is allowed to continue until the maturity of financing based on the previous decision of the respective Sharia committees of the IFIs. And based on that, the banks look into the possibility of other contracts, and finally they resort into tawarruk. Tawarruk consists of two sale and purchase contracts. The first involves the sale of an asset by a seller to a purchaser on a different basis, and subsequently the purchaser of the first sale will sell the same asset to a third party on a cash and spot basis. This is the basic structure, a very basic structure of tawarruk. Step number one, this is I copy from tawarruk atau PD tawarruk policy document on tawarruk by Bank Negara Malaysia. Step number one, the IFI purchase the asset from asset supplier, for example, for 100,000 ringgit. The IFI, step number two, pays cash to the seller or the supplier. Step number three, which is the important step here, which creates indebtedness, sells the same asset to the customer at cost plus, for example, 100 plus 20,000, 120,000 ringgit. And step number 4, the customer will pay that amount in deferred payment on deferred payment basis.
Mr. Azizi, Mr. Azizi, 1 minute more.
Yeah. Okay.
1 minute.
I cut it short. Asset supplier 2, step 5 and 6 is the cash out of the asset to the asset supplier 2. Okay, that's the basic structure of Tawarruk. And the same application is used, or the same principle is used in the offering of Ar-Rahnu, except the indebtedness in the earlier or in the original settings, the indebtedness was created using Qard, but now it is created using Tawarruk. And that would, to some extent, eliminate the issue of Qard Jarranaf'an or interconditionality in the contract. The steps are spelled out here, and that would mark the end of my presentation. Thank you, Dr. Zaidi. Assalamualaikum.
Waalaikumsalam. Thank you, Mr. Azizi. Because of the run of time, so I just only require for have one question from the audience, from the participant. Okay, the question goes to Mr. Hakan. Maybe the question goes to Prof. Dr. Mujahid. With reflecting on this current situation, COVID-19, what steps have been taken by Central Bank Turkey in overcoming the challenges of COVID-19 to depositors, customer of Islamic banks or commercial bank? For example, in Malaysia, the Central Bank of Malaysia has adopted a more moratorium programs for Malaysian customers who are affected by the COVID-19 pandemic. What role has taken by Central Bank of Turkey played and program has launched in securing customers during this COVID-19 challenge? So I open to our presenter from Turkey to respond the question.
Okay, thank you for the question. It's a very important point. I will try to answer by the precaution taken by different organizations in Turkey. Firstly, one point in Turkey, when we look to which authority is responsible for supervising and regulating the Islamic banks or the other conventional banks, is not central bank. Yes, there are some points. There are some regulation they are taking, but the main responsible authority in Turkey is Banking Regulation and Supervision Authority. So in COVID-19 pandemic, Central Bank of Turkey are responsible for financial stability, and for this reason, and also they launch some programs, especially they try to inject liquidity to the market through the banks and other Islamic banks. In summer, they decrease the interest rate, and also some state-owned banks, including Islamic banks, state-owned Islamic banks, they introduced very subsidized credits to the, especially specific to the some sectors. On the other hand, Banking Regulation Authority, they allow Islamic bank to some moving area about the NPL, non-performing loans. They introduce some regulation, allow the Islamic banks to move more comfortably in terms of non-performing loans. Especially also Islamic banks introduce some package to extend the debt, especially focusing on the SMEs who have troubles to pay to pay back their credits. For this reason, there are some institutions or regulatory bodies introduce different package to especially targeting the SMEs. For example, Ministry of Finance of Turkey proposed some package targeted to SMEs, and some of the package includes Islamic banks as well, but we cannot dedicate all precautions to the one specific organization, such as Central Bank of Turkey. There are lots of stakeholders, Banking Regulation and Supervision Authority, Participation Banking Association of Turkey, and Central Bank of Turkey, and Ministry of Finance. All of them propose some packages, especially targeted to those who have problems due to the pandemic to repay their debt to the Islamic banks or other conventional banks.
Okay, thank you, Doctor. So maybe for the details answer, maybe any participant can direct personal message or an email to the presenter. So because the time is limited, once again, I'm so sorry. So we need to stop at this point. And then I would like to say thanks again to the presenter for the informative and interesting presentation, and also my thanks goes to the audience for participation. Okay, hopefully the presentation will be beneficial for everybody. So thank you for your attention, and Assalamualaikum warahmatullahi taala wabarakatuh. I pass this floor to MC. Assalamualaikum warahmatullahi taala wabarakatuh.
Waalaikumsalam. Thank you to Dr. Muhammad Zaidi bin Daud and all the panels for the precious knowledge and information just now. Next, let's continue for our second session, which will be moderated by Professor Dr. Sakarya Gormush. Lutfen Buyurun, please welcome.
Okay, can you hear me right now? Can you hear me?
Yes, we can hear you, Hocam. Right now we can hear.
Okay. Bismillahirrahmanirrahim. First of all, I thanks to Allah subhanahu wa ta'ala to bring us together for this difficult time. Secondly, I would like to thanks to Sakarya University and University of Malaya to organize this workshop and to fresh the Islamic economic and finance in this difficult time. Also, I finally thanks to all the participants, all the presenters. Because we have the time limited, I want to pass the presenter. We have three presenters in this session. The first presenter is Mustafa Özer, and his paper is The Role of Sukuk in the Turkish Market, Do Lease Certification Replace the Debt Certification. So floor is yours, Mustafa. You have just 12 minutes because we have time limitation, okay?
Okay, sir. Good morning for the audience who are joining from Turkey, and good afternoon for Malaysia. Today I will present a small part of my master thesis. My master thesis was named Portfolio Diversification as a Hedge Against Inflation in an Emerging Market. We investigated 96 individual assets and tried to find the best asset as a hedge against inflation. I was under the supervision of Professor Bülent Güloğlu and Professor Sakarya Görmuş. Without their help, I would not be able to finish it, so I am thankful to them. I will shortly explain the reason why we did this investigation. Then I will present some studies which are about Turkish sukuk. And finally, I will present results from my dissertation. We know that inflation is really important for investors. The decrease in the purchasing power of money due to the inflation affects the value of investments in financial assets. This situation creates uncertainty about the future returns. The importance of inflation for financial markets was also underlined from Lindner. He said that few things are great importance in financial markets. Beginning from Irving Fisher, a serious literature has emerged to find the best hedging assets against inflation. However, despite the serious and dedicated studies in of this field, researchers do not have concurrence on which financial instrument would provide a hedge against inflation. This occurs because academicians use different financial instruments with different sample period and different countries. So looking to the conventional side, we can say that it is really hard to find the best hedging assets against inflation. When we look from the perspective of a faith-based investor, we see that this aspect is even more difficult than the conventional one. The reason for this is a faith-based investor do not invest conventional assets because conventional financial system carry out some activities that are contrary to the religious rules, like earning interest and so on. So what do a faith-based investor do? They actually stay away from the conventional assets and invest in gold. We know that because in one interview, a CEO of the Istanbul Gold Refinery, Ayşen Esen, said that there is between 3 and 5,000 tons of gold, which we know to be under the pillow, is a shadow economy between 200 and 300 billion dollars. We see that people are holding gold as a store of value, but this way of hedging do not contribute to the financial system. So this question comes in mind. How can we pull the savings of these people to the financial system so that they get a protection against inflation and also their savings can contribute to the national economy? Then we asked further two questions. Are there any convenient financial instruments for a faith-based investor in financial markets? If there is, may a faith-based investor hedge against inflation using these instruments? To answer this question, we investigated the hedging ability of sukuk against inflation. Before heading up further, we have to know that sukuk issuance in Turkey is very new compared to other countries. For instance, Malaysia began issuing in 90s, I guess. So our data, which I mean by our Turkey data, is very limited. Sukuk issuance first became legal with the regulation made in 2010 in Turkey. In the following year, in 2011, some tax regulations were made, and in 2012, first sovereign sukuk was issued by the Turkish Treasury. When we look at the ratio of lease certificates to debt certificates, we see that the issuance of sukuk has considerably soared in the last 3 years. This shows that the importance of sukuk has risen recently in Turkey. As I said earlier, that Turkey's sukuk issuance first started in 2012. Therefore, there are few empirical studies related to Turkey, and also
Mustafa, 6 minutes left.
Okay, sir. They were recently published. I only found 4 studies which are making econometric investigations. First one is the Burak Pirgayip et al., which investigated the contribution of sukuk in diversification of bond portfolios. Second one is Seda Yıldırım et al., which investigated the effect of sukuk on growth. Third one is Faruk Ballı et al., which investigated the relationship between macroeconomics announcement and sukuk. And the last one, Tunahan Avcı, who investigated causal relation between growth and sukuk. As we come to our results, in our study, we use a non-parametric time series analysis, which is called continuous wavelet transform. I will not explain the continuous wavelet transform method here, as it has some long theoretical background, but it is sufficient to know that it briefly shows us the dynamic relationship between any two variables for short run, medium run, and long run. So these are the figures of government sukuk, private sukuk, and Dow Jones Sukuk Index. We took Dow Jones Industrial Index as an international asset, and as the data for Turkish sukuk is limited, it helps us to compare it sukuk with bonds. These figures tells us briefly that government sukuk provides hedge against inflation in short term. Private sukuk and inflation are not correlated with each other. And last one, the Dow Jones Sukuk Index provide hedge against inflation for different holding periods. And these are figures of bonds with different maturities. These figures tells us in brief that bonds with 2 years maturity provides hedge against inflation for 8-16 months holding period. Bonds with 5 years maturity provides hedge against inflation for all holding periods. Bonds with 10 years maturity are perverse hedge, which means that it is not good for inflation hedging. If we compare the bonds with sukuk in terms of inflation hedging, we see that the 5 years bonds and the Dow Jones Sukuk Index are the best hedging tools. This is the Sharia compliant portfolio. We made 10 different portfolios with different risks to see how risk affects the share of sukuk in portfolio. Risks increases from left to right. The other assets are foreign currencies, which are here euro and dollar, gold, and participation 30 index, which is indexed in accordance with the Sharia rules. As we can see in table, market with small volatility is risk, is the best hedging environment for sukuk. It has a share of 87%, which is relatively high. As risk goes up from left to right in table, we see that the share of sukuk falls and the share of gold increase up to a threshold. After this threshold, equities become predominant in portfolio. Then we made a conventional portfolio and wanted to see the disadvantages and or advantages of a faith-based investor. In a riskless environment, again, we see that sukuk has the predominant share in portfolio. But we also see that in riskless environment, bonds have 6% share. So we conclude that faith-based investors are at disadvantage. As risk goes up, then the share of sukuk falls and the share of equities rise. As we see in a higher risk, share of participation 30 index has the share of 46%, which shows also that faith-based investor is at disadvantage. Although the faith-based investor is relatively disadvantaged, this study showed that sukuk is an important diversification tool for a faith-based investor. And this has some policy implications. This study has some policy implications. From the investor's points of view, trading a financial product in secondary market increases the investor's interest in this financial product. Therefore, the export of types of sukuk like ijara, vakala, mudaraba, and musharaka that can be traded in the secondary market should be promoted. Another implication is that in Turkey, investors have little information about Sukuk. In this context, platforms where information about Sukuk can be obtained should be created. And also one last implication is that Sukuk in Turkey is carried out by Islamic banks. Firms also have insufficient knowledge about Sukuk. Sukuk training can be provided to companies by authorized institutions. So this is my conclusions. Thank you for listening.
Thank you, Mustafa. Now we pass the second presenter. Just 1 second. I lost them. Okay, our second presenter, Ahmet Azam Süleyman from University of Malaya, and his topic is prospect and challenge of the sustainable and responsible investment, Sukuk in Malaysia, and floor is your Ahmet Azam. Okay, Ahmet.
Okay. Sorry, I'm mute. Okay. Today, my presentation is the prospect and challenges of SRI investment Sukuk in Malaysia. Okay.
Okay, so floor is yours, Ahmet.
What?
The floor is yours. You can start.
Yes, I start now. Okay. These are the Sukuk defined, conventional Sukuk, financial certificate similar to the bond that comply the Sharia law. Proceed use the purchasing an asset which the investor partially own. Investor receive the share of the profit generated by the asset instead the interest payment. The issuer promise to buy back the instrument at the future date at par value. And green Sukuk is the financial renewable energy or other environmental asset. Okay, so separation green Sukuk is by government entity, and corporate green Sukuk is by private sector organization. Okay. In Malaysia, Malaysia Green Financial Market, Green and SRI policy in Malaysia in 11 Malaysia Plan from Malaysia government. Green Technology Master Plan from MISTIC or Ministry of Energy, Science, Technology, Environmental and Climate Change. Okay, SRI Sukuk framework or framework and SRI Sukuk framework and guideline from Security Commission and ESG Index and Sustainability report from Bursa Malaysia and value-based intimidation from Central Bank. Okay, and in Malaysia, government give the government incentive tax deduction for estimation institute on the issuance of the SRI Sukuk and or authorized by logic with SC until the year assessment 2030. Okay. That incentive under MIDA and Green Tech Malaysia for green technology activities in energy, transportation, building, waste management, and supporting service activity. Green technology financing scheme and Bank Pembangunan Malaysia berhad 1 billion sustainable development financing fund in budget 2019. Okay. Green Serai Sukuk grant scheme objective to extend the issuer to fund external review costs relating the green SRI Sukuk issuance under the framework claim issuer can claim for the grant based on the issue of program. Should be more one issuer in requiring spread internal review or the issuer is able to claim on the review cost include. Effective from January 2008 until full analyze, 90% actual external review cost subject to the maximum 300,000. Effective from July on. Application from the market capital market Malaysia, okay, and grant reimbursement basic within 16 days. Open complete the submission. Project under Green Sukuk, 3 or 4 item natural resources. Use the sustainability land, sustainability forestry and agriculture, biodiversity valorization, and recover redevelopment of content site. Okay, revenue energy, new revenue energy or everything energy, powerful power generation and transmission system, power generating system and efficient transmission of energy efficiency, resulting the reduction of greenhouse gas emission or energy consumption per unit output. Economic development and community, public and medical service. Okay, public education service. Example, sukuk ihsan by Khazanah National. The school is the fund for many school. This is the we call the school amanah. Okay, and community service and urban revitalization. Wakaf asset is property and asset development. Okay. Briefly is the green sukuk eligible in Sakarya project in green, wakaf and social. In green is the renewable energy efficiency, pollution prevention, management of living nature and resources and land use, efficiency, regulate economy adapt product, clean transportation, sustainability, water and wastewater management, and the wakaf is the development of wakaf property or asset in social, food security, affordable basic infrastructure, social economy, and power. This is the briefing the eligible SRAI project. Okay. Malaysia's SRI Sukuk signed the introduction of the SRAI Sukuk framework in 2017. There are total 30 SRAI Sukuk issued in Malaysia, including 7 SRAI Sukuk issued which they are duly organized under ASEAN standard. Okay. In the green sukuk space, 4.3 billion of green sukuk has issued, making up more 19 SRI sukuk issued, financing 482 megawatt for renewable energy project in Malaysia. Okay. This is the breakdown SRI sukuk issued in Malaysia at April 2002. Okay, green sukuk 10 issued, social 2 issued, and sustainability is 1 issue. Green sukuk issued in Malaysia, Tadau Energy, special financing to large scale solar energy project in Sabah. Okay, quarter solar park to fund photovoltaic solar energy project in Kedah, Melaka, and Terengganu. PNB Venture Sdn Berhad to fund 83 floor of office space and part of Merdeka Tower project, Sina Camry, to fund the photovoltaic solar energy project in Perak, UITM Solar Power Center Berhad to finance and the development of a utility solar power plant in Pahang. Okay. Contract use the green sukuk issue, SRI sukuk tadaf ijarah masuk faham bizimah and hybrid istisna and ijarah BEWG the wakalah sukuk, the Sarawak green hydro sukuk itu sukuk mudharabah contract and sukuk sukuk ihsan wakalah al-bish timah. Okay. Green sukuk prospect in Malaysia, increase demand for energy supply, increase demand for energy financing. Green sukuk tax incentive exclude green technology financing scheme, increase awareness of investor. Okay. First, increase the demand energy supply. Energy will increase the future due the increase the human population. For example, in Malaysia, population increase more than 30 million and increase 11.9 from the population in 2000. This show Malaysia is one of the faster growing countries with the high demand for energy, water, transportation, urban development, and infrastructure increase demand for energy financing. Okay. Incentive project plan it has been made for this purpose. According to WBG, the financing objective to assist Malaysia electricity generation to target 7,000 by 2000.
2 minutes left, Ahmed.
2 minutes left. Okay. Sukuk green tax incentive include the budget tax deduction until the assessment 2002, give the investor relate the production of a cost of SRI sukuk. Addition tax incentive provide the green technology project relate the renewable energy efficiency, green building, green data center, waste management as well as plan include by and company the pushing of green technology as asset. Green technology financial scheme, government also introduce special financing scheme, namely the green technology financing scheme, totally 5 billion until 2002. In addition, SC established the SRI Sukuk grant scheme, 6 billion to provide incentive is obtain the green certification. Increase awareness of investor. In 2007, Malaysia is first sukuk. Totally allocation is the 3.5 billion. Show investor commitment to grow the sukuk market finance green technology project with the support from SC Bank Negara Malaysia and WBG. This show the Malaysia green sukuk market is started to grow and awareness to participant investor to want to get the investment get the benefit of the environment. Okay, last slide is the green sukuk challenges in Malaysia. This is the knowledge and awareness environmental friendly infrastructure project. This is big. The knowledge the relate green technology is the low environmental. The government need improve the environmental protection, the encourage development green building, increase the green energy project, increase the program understanding awareness regarding the green technology, high project cost because this the high project cost and limited financing scheme that make a green technology project is less popular among the financial institution in term of financing. Confident and guarantee to investor, difficult to ensure investor that Sukuk revenue will be used the asset project meet the reliable green technology standard. No performance measure standard. That means standard verification system in the international green Sukuk performance is measured. Green Sukuk is part of Sukuk transaction is require guideline fatwa from Sharia advisor to combine Sukuk regarding Sukuk Sharia regarding Sharia compliant matter. High risk profile. So green Sukuk can be categorized as high risk green technology project. Many green technology project involve the new technology for development and construction for green technology operation. Last summary and conclusion. In general, green Sukuk is many positive effect among than protection to the environment, promoting renewable energy, creating the more green building, continuous increasing awareness and education program to customers. Okay, therefore attention should be given our coming challenges to reduce the risk growth of the green Sukuk market in Malaysia and protect the environmental by issuing many environmentally friendly investment. Okay, that's all from me.
Okay, thank you, Ahmet Azam. Our last paper will be presented Ali Can Yenice, and topic will be Islamic Social Finance Institution in Turkey and an overview. Okay, floor is yours, Ali Can.
Thank you, Professor. I want to share my presentation. Just a minute, sorry. Can you hear me, my presentation?
Yeah, we can see and we can hear you.
Okay, Assalamu alaikum, everyone. It is my pleasure to be here today and to have the opportunity, this interesting and promising conference. Firstly, I want to express what I will discuss in the presentation. In the presentation, I will discuss selected Islamic social finance institutions in Turkey. My talk will be in three parts. The first one covers the theoretical background. In this section, I will share concepts, definitions, and why we need this perspective. The second one deals with institutions and activities of Islamic social finance in Turkey. Here, I will try to explain the economic size and social effects of the institutions and their activities. One of these institutions belongs to businessmen, the other one belongs to civil society. The third section is about the evolution of Islamic social finance in Turkey. Here, I will explain the social impacts of the institution in the light of my observation and the information I have obtained from the literature. Let's start to talk about Islamic social finance. For a theoretical perspective, I use Professor Mohit Nahar's Islamic social finance theoretical perspective. You know, Professor Arshad from Malaysia, and he's working IIM. Professor Arshad was the first time concept of Islamic social finance. Before him, this concept was used, but a theoretical framework was not created, especially in IRT's Islamic social finance reports. The concept is used and introduced Islamic social finance in Muslim countries. In the report, Islamic social finance means institutions or activities that elevate poverty or enable income distribution. In here, Islamic social finance sector consists of zakah, sadaqah, awqaf, Islamic microfinance, and not-for-profit Islamic organization. However, Professor Arshad extended this conceptual meaning using the third sector theory. Furthermore, the activities of the institutions create a social impact. Well, you can see my question. These questions are very important for my presentation, but also for the discipline of Islamic finance itself. Although the answers to the questions on the limits of study, let's try to answer briefly. What is the Islamic social finance? Islamic social finance is defined by Professor Arshad as Islamic social finance concerns Sharia compliant allocation and management, financial resource, assets and liabilities over space and time, often under conditions of risk and uncertainty for realizing the maqasid sharia. According to Arshad, Islamic finance or Islamic financial institutions have moved away from their core values and focused only on profit. So, in what subjects did they move away from their core values and resemble conventional counterparts? First of all, they focused only on profit, neglecting the environment society. They disseminate debt-based contracts instead of equity-based contracts. They develop financial institutions instead of developing social institutions. You know, there is a much criticism of Islamic finance and Islamic banking in particular. Expressing each of these will go beyond the limits of the study. We summarize them according to Arshad studies. This is where Islamic social finance is the call to the core values of Islamic finance. For this reason, Arshad used the third sector theoretical structure that considers people, planet, profit. This is triple bottom line. Thus, not only the profit, but also the maqasid sharia as whole are taken into account. In this direction, we can state that Islamic social finance is included in Islamic finance. But like the criticized Islamic financial institution, its sole purpose is not profit, but social impact. Let's have a look at figure 1. It shows us Islamic social finance activities and institutions in the welfare triangle. It is also explains their characteristics and institutional structure. You can see above the AB line refers to formal activities and institution. The opposite is informal. The upper part of the CD line is not for profit. The lower part is for profit. Let's move on the second section. I wanna explain our institution. This institution, this institution is a poor Islamic social finance institutions. In this section, I will share with you two Islamic social financial institutions in Turkey. Sorry, I cannot hear you, Professor Shak Görmüş.
6 minutes left.
6 minutes left. I got it. The first one, Cardinal Hassan Fund, set up by the Independent Industrialist and Businessmen Association. We call it MÜSİAD. I prefer to say MÜSİAD. The second is non-government organization. This is Foundation of Research and Praxis for Islamic Economists. We call it IKSAR. IKSAR, an Ottoman word, means fertility. This is also favors entrepreneurs, and it gives Cardul Hassan to enterprises. It is also testing with other types of partnership, such as Musharaka Mudaraba. Uh, as you know, all two institutions are poor Islamic social financial institutions. Therefore, they are located in the area of 10. You can see in that. Let's start the first institution. With more than 11,000 members of association, it provides just about 2 million jobs. The association represents around the 60,000 enterprises in Turkey. Müsiat has created an organization to meet the financing needs of business. The name of this organization is the Karza Hasan Sandı. You can call fund of Cardul Hasan. The organization has 4 funds. Each fund has different. The first one, Cardul Hasan Fund. This fund consists of 70% of the entrance fee and annual dues of Müsiat members. Only organizations members can benefit from this fund. The second fund, individual Cardul Hasan Fund. This fund takes Cardul Hasan and gives Cardul Hasan. The fund consists of loans given by individuals who are or not members of the organization. It performs a two-side Cardul Hasan transaction. Third fund, welfare fund. The fund consists of 25% of the entrance fee and annual dues of Müsiat members. It provides non-refundable essence. Zekat, fourth one, Zekat Fund. The fund consists of donation of members of the organization and non-members or people. The fund makes a non-refundable donation. You can see table 1, all of them, and you can see right side the data of the activities. We can pass the page. We can test the other institution. Let's talk about the institution that I am a volunteer for. The association operates in the province of Sakarya and conducts research and projects on Islamic economics. It was founded by our team, our colleague, namely Research Center for Islamic Economics and Finance staff. Microfinancial activities based on Cardul Hasan help entrepreneurs in Sakarya to access finance. In addition to this, it aims to raise awareness of the society about Islamic economics. You can see the data of Cardul Hasan. The association provide financing to new or emerging initiatives with high reliability. It provides approximately $42,000 of financing within 3 years. Let's talk about last slide. We can talk about social impact of this institution. Social impact generally consists of themes of solidarity, empathy, sense of belonging, and cooperation. People in need of financing are often those that banks do not consider credible. When you create trusting relationship with these people, they feel that they are not alone. They respect and care about your institution. They think they have an individual and unique relationship. Let's think for a moment about the debt relationship with a bank. The officer at the bank has a corporate relationship with you. You know that you are not in solidarity with you. However, social institutions are not like that. They make you feel that you are part of the institution. Thank you for listening and attending.
Okay, thank you, Ali. Thank you, Alican. Thank you, all the participants. We have time limitation, so there is one question, okay, for the Mustafa Özer. I will read this question and ask the Mustafa Özer to answer it. Okay, question came from Abdurrahman Khan. Abdurrahman Khan. Okay, his question is the impact of sukuk on inflation related to the issuance volume of the sukuk, or it is related to a specific aspect of the sukuk? So is related to volume of sukuk or the specific aspect of the sukuk? The question is continue, meaning that if the sukuk issuance volume for per year were to become the same as the issues of the volume of the bond, then will be same effect. So understand the question? Mustafa, did you understand the question?
I didn't get it, sir.
You didn't get it?
No.
Okay, question is this. Okay, the relationship between the sukuk and inflation. Okay, you talk about this. The question is, this relationship related to volume of the sukuk or the specific aspect of the sukuk? Okay. Also, the Abdurrahman gave you some explanation and he asked this question, continue. He said that if the issues of the sukuk value equal to issues of the bond for per year, then you are going to get the same result.
I don't think so. The sukuk issuance is related to demand and supply side, right? And the ratio is determined different from bonds.
Okay, maybe you can think about this question more. So your conclusion was that there is at least in the short run, there is a relationship between the sukuk and the inflation. So sukuk is a hedge for the inflation. So the question is, this is also related to volume of the sukuk, the issues volume of the. This means we issue more and more sukuk, then the sukuk will be more hedge for the inflation. So you can think about this question later, okay? Because we have the time limitation. I thanks to all the participants. They really have the valuable information. I thanks all of them, and we can continue our workshop.
Thank you to Professor Dr. Shakir Gormush and all the panels for the talk. Dear honorable guests, ladies and gentlemen, we will take a short break for 10 minutes for Asar prayer for Malaysian participants. Please do not leave the webinar. We will start again at 5:15 p.m. Malaysian time and 12:15 p.m. Turkish time.
Hi, my name is Fadil. I'm from Indonesia. I'm a student at Sakarya University and I'm taking international program. And also I have been staying in Sakarya since 2017. It's almost 3 years. And here I want to give some opinions about Sakarya University, Sakarya City, and also Turkey. So I think Sakarya University is one of the best state university in Turkey. And also I'm very happy to continue my study here because of the lecturer are very welcome to the international students and they are very helpful, and also for the environment here is very green and also quiet and the fresh air, so I very like to study in Sakarya University. Except that I'm also glad to stay in Sakarya city because of the strategic location. When you go to Istanbul, it's not far. When you go to Ankara, it's not far. So in the middle. So I think, and also for the living cost here is very cheap than the other cities. So that's why to stay and study in Sakarya, I think is the best option. So a long time ago, I have a dream to continue my study in Turkey. So now the dream is come true. Now I'm studying in Sakarya University.
Hello, my name is Munyaradzi Gondobwe. I am from Zimbabwe. I'm 24 years old. I'm studying civil engineering at Sakarya University. And I'm currently I just finished my 3rd year and I'm moving into 4th year. I've been here like for 4 years, and my thoughts about Sakarya University, it is a very professional university. Like the teachers are very professional. It was the only place where I really felt safe. I never felt discriminated, and I really enjoyed my studying experience here at Sakarya University. The university is nice, it's beautiful, it's located just close to Sapanja Lake, and it's just a beautiful place, and I've really enjoyed this time that I've spent here. Sakarya University is in a city called Sakarya. It's a quiet place. It's not noisy, and the people there are very friendly. And I've really enjoyed interacting with the Turkish people. They have been very welcoming and very friendly. They invite you to their houses, and it's just been a wonderful experience studying in Sakarya. And I would definitely recommend anyone who is thinking of coming to study in Turkey to certainly consider Sakarya University. It's literally one of the best universities. My thoughts on Turkey, really in general. Turkey is a beautiful country. It is a nice place. There are many places to go. There is Istanbul and Izmir. There are many cultural sites. The food is nice. There's a rich cultural history that is well preserved, so there is always a lot of things to do. And why I decided, or why I chose to come to study in Turkey, it was primarily because I got a scholarship from the Turkish government, which allowed me to come and study here. But I'd always been watching on the news and seeing what the Turkish people have been doing in terms of infrastructure development in civil engineering in particular. They have undertaken quite huge projects, including they recently finished the airport and the train systems, the big libraries and hospitals. So if you want to study civil engineering, this was literally the best place that I could think of. So coming to Turkey came as an advantage because I got to learn from the very best. They have well-maintained, well-built infrastructure, which is beautiful, and I feel that I'll be able to transfer all this knowledge when I go back home and share what I learned in this place and go and build similar structures and similar systems when I go back to Zimbabwe.
My name is Jonas Camilius. I'm an international student in Sakarya University. I'm coming from Tanzania and I came to Turkey in 2016. I've been here for 4 years. I'm studying in business management. And I would like to say I like Turkey because of its history, and the tourism sector is outstanding. I would like to encourage international students and other students all over the world to come to Sakarya University because of its quality in education, it's cheapest, and it's a place where international students meet.
What is it that we come here to do? Here, where fear is afterthought, where every day brings a new spark, a new chance of building a future. Made by those willing to push boundaries, by those willing to work selflessly, because that is what we come here to do, to create a future, not just for ourselves, but for humanity. It is in the instruments we hold, the tools we use, the focus we apply, the books we learn from, the effort we put in, the tides we ride, and the advance we make, that we can wear these faces, proud faces, bright faces, hardworking faces. Our faces that radiate with happiness in the knowing that what we do here at University Malaya is learn, advance in our knowledge for the nation and for the development of humanity with integrity, with creativity, with open-mindedness. Whether it be through research or our education, we do it together. And when we succeed, we ride the waves again, creating newer, bolder ideas as a team and with like-minded individuals. Remembering our first day here and why we set out on this journey. Remembering who we do this for, the future we're building, the lives we're saving. This is us, and these are the victories we're
Bismillahirrahmanirrahim. Alhamdulillah. Praise to Allah subhanahu wa ta'ala. We are be able to continue our webinar today. Let's continue our webinar with next event, which is keynote speech. Now, I would like to invite Mr. Azizi bin Chaman to moderate this session. Please welcome.
Mr. Aziz, it's your chair. We are waiting for you. Mr. Azizi, can you hear us? I think Mr. Azizi has some connection problem. I would like to briefly introduce Professor Mehmet Asuta just till Mr. Azizi can reconnect again. Professor Mehmet Asuta is a professor of Islamic Political Economics and Islamic Finance in the Durham University. He's also director of the Durham Islamic Economics and Finance Center. Due to time limitation, I don't want to go for further details. He's also prominent scholars of the Islamic finance. So we would like to invite Prof. Mehmet Asutai. Its floor is yours, please.
Okay, Assalamu alaikum to everyone. It is good to be here. It is good to be among friends. Sakarya University, of course, has a special place for me in terms of hoping for a development of an alternative way of reconfiguring Islamic finance. But I have had certain engagements with University of Malaya. I think I have acted to examine a couple of PhD theses in Islamic finance. It is good to be here. It is good to see that we have overcome the time issues as well as the space issues through the webinar conferences to bring different institutions together to collaborate. Because the project that we have in front of us, Islamic economics project, is an importantly large project. It is an intellectual effort, and therefore it is terribly difficult just one institution to be able to bring together the components to produce a viable Islamic economics and finance theory as well as practice. And therefore it is essential that we come together, bring our synergies together to work and to make a difference, hopefully, in the realm of Islamic economics and finance. And this is an important area for us. Is not only how to reconfigure economics and finance, but at the same time, there is the political economy of it, the whole identity part of it. And therefore, it has become an essential project in the Muslim world to be completed and hopefully contribute to the betterment of life, not only in the Muslim world, but all around the world. And therefore, I should congratulate you all putting together a collaborative program through which you can exchange ideas, establish new forms of collaborations for knowledge development, and that is important. And secondly, of course, I want to express my deep sadness for the passing away of Professor Diraja Unku Abdulaziz, one of the pioneers of Islamic economics movement in Malaysia. He has contributed immensely, in particular with the emergence of the Islamic economic movement in late 60s and 70s, by leading the light for us, for the Malaysian colleagues in particular, but for the Islamic economics and finance world in general, to give us a new horizon, to provide us a new horizon that alternative ways can be possible. As Malaysia has demonstrated that alternative way has been in the making, and people like Professor Unku has contributed to that narrative, to that practice, and therefore we have to celebrate their lives as well. Professor Diraja Unku Abdulaziz, his life, his legacy is important for us to consider. My condolences to our Malaysian colleagues, Malaysian Islamic economics and finance movement, but the general Islamic economics movement as well. May the peace and blessings of Allah subhanahu wa ta'ala be with his soul, inshallah, and we pray for his salvation in the hereafter also. And again, thank you for having me in this conference. As I mentioned, Sakarya University is a dear institution to me, but at the same time, my engagement in different levels with the University of Malaya. But of course, the topic webinar has provided us an amazing opportunity that we managed to organize plenty of conferences through webinar, of course. That has contributed our understanding of how to expand knowledge and collaborate through collaboration. And today I want to work on the whole Islamic economic development issue by linking to Islamic banking and finance. I can see that time is an issue. I prepared a rather large presentation, but I will pass certain aspect of this presentation, and hopefully we can concentrate some of the issues. Well, I have here some normative issues as well as some empirical analysis that I want to share with you. Of course, the question the imposed question whether Islamic banking should make a difference on socioeconomic development is a valid question from both sides, from the proponents to the opposers, because the opposers would argue that bank is a bank, is an accumulative institution, is a shareholder base, is a corporate, and therefore why should a bank, including Islamic bank, should contribute to economic development? So when we look at from that particular angle, from a very much accumulative institution as it has emerged in the West, indeed, it's a correct response. Why should bank, being a private bank, should contribute to the social good in the society? However, despite the fact that being an institutional logic, it's institutional logic entirely based on Enlightenment ontology, which essentializes human as a bank as an institution. The way we have reconfigured Islamic banking and finance through different means, including fiqh, but importantly the Islamic normativeness, it suggests something else. In this Islamization process, the way we started to redefine what is Islamic banking, therefore provides a rationale why Islamic banking should contribute to economic development. Of course, having said that, there's a large literature in the post-1980 period after the Washington Consensus and neoliberalism, looking at banks and financial institutions as a source of new wealth creation. So there's a plethora of publications. But when it comes to, because that is very much based on efficiency and how efficient use of resources contribute to economic growth, wealth creation. However, when we look at the literature in terms of economic development or socioeconomic development, unfortunately, the literature is terribly limited because, as I mentioned in the beginning, the role of socioeconomic development is not considered for banks and financial institutions, unless, as we are doing here, we are reconfiguring, we are redefining what is bank or what is financial institution. In other words, we are saying that, look, yes, there is this institutional logic of banking and finance, but we are reshaping that, at least in the current practice, we are Islamizing that to suggest something different. And therefore, we would all expect a particular outcome from Islamic banks and financial institutions, a particular consequence, and that consequence should relate to the larger good, the social good, the ihsan, as we define it, ihsani society. And that distinction is important for us to consider. Therefore, unfortunately, as some colleagues in the Islamic finance circles, unfortunately, including some Sharia scholars, considering that what are we expecting from Islamic banks and financial institutions in terms of socioeconomic development cannot be sustained, cannot be possible, because these are banks, these are shareholder maximizing. But that's unfortunately is a very falsified understanding of what Islamic finance and Islamic banking is, or how it is configured, rather than this is a typical way of giving way for the market and capitalism shaping Islamic banking and finance. However, what we are saying that rather than submitting to the market conditions, to the institutional logic of market and capitalism, we want to redefine, and that redefinition has been made since 1970s with people like, as I mentioned, Professor Unku Abdelaziz and his generation aimed at redefining. And in that redefining, what we have seen, Islamic banking and finance was considered as an important instrument for the salvation of Bumiputras, like in Malaysia, salvation of Bumiputras in the country. Hence, a particular objective function was imposed by the founding fathers to Islamic banking and finance, how the certain sectors of society who have been deprived of resources of development can be empowered and can be emancipated. So that is very much the narrative that we have for Islamic banking and finance, despite the fact that in recent years, unfortunately, our colleagues in Islamic banking, including Sharia scholars, have shifted. Some Sharia scholars have shifted to the position that these are banks, financial institutions. They are there to manage the monies of rich people. So there is this shift in the meaning, and therefore we have to bring back to that initial objective, how the founding fathers provided us a particular worldview. And therefore, search for meaning is essential for us. And rather than considering Islamic banking and finance that we have around us as end of the history, we should consider that this is only a beginning. And in this beginning, indeed, certain progress has been achieved in terms of accumulating capital and transferring this capital. But what is missing and what is important to develop it is certain socioeconomic qualities in the lives of people, and spreading that wealth as well as socioeconomic well-being to the larger part of the society. In particular, crisis times, such as the COVID-19, indicates that we cannot sustain in any part of the world, not only in the Muslim world, but in any part of the world, this very corporate understanding, the shareholder understanding of banks and financial institutions based on, unfortunately, accumulation. We have seen that under the COVID conditions, large amounts of money is by each government with the quantitative easing has been provided to the markets, liquidity expansion. But again, when we look at where this liquidity has gone, despite the fact that economies are not functioning, we have seen that stock markets are doing fantastically well. And hence, it contributes, again, despite the fact that they are not working, again, it contributes to the expansion of the capital base at the hand of rich sector of the society, the capital owners. And looking at data in different places, such as in Turkey, in the last 6 months, the share of capital has increased out of GDP by 10%, while the share of wage and salary owners has decreased by 10%. So the quantitative easing has been working in favor of capital in everywhere. Hence, the equation and the policies related with that equation is terribly wrong. And therefore, with the COVID in particular, but also with the normativeness of Islamic finance, we have to look into how we can change this equation in the betterment of society so that we can generate this society of ihsan. And that society of ihsan, the socializing individuals, the socializing institutions, so that the sharing economy of Islam, as essentialized by ihsan and Islamic governance, Islamic society, the good society, how that can be developed. And therefore, we have to go beyond in this, rather than squeezing ourselves, confining ourselves with the definition of economics, which suggests maximizing an efficiency. We have to move from such an understanding and find a theoretical framework for ourselves within the definition of iqtisad, as in Arabic, which would imply equity, balance, and equilibrium. So this has to be the objective function, the new objective function for us to consider: equity, balance, and equilibrium, as opposed to maximizing an efficiency. And therefore, unfortunately, if we are to develop authentic ways of developing knowledge or institutions, we have to first identify our knowledge base and the implication of that knowledge base for us. Therefore, the question why banks, including Islamic banks, should contribute to development, socioeconomic development, is not valid. For conventional banks is not valid, as we have seen with the SDGs. They have to work also for the larger development of society, but in particular in Islamic bank, this is not an exogenously imposed objective function, but it is direct, it is structured, it's an endogenous necessity for Islamic banks to contribute to the ihsani development of the society through sharing economy. In other words, we are in between ihsan versus the accumulation. Accumulation belongs to a particular ontology, the enlightenment ontology of the West. However, ihsan is the ontological objective of the Muslim world. And therefore, this is an essentially important for us to understand. The objective function is the first thing that we have to determine. And therefore, I would suggest you to go to the mission and vision statements of Islamic banks. And unfortunately, what we will be seeing is very much market-oriented objective function rather than the objective function that we are talking here through the ihsan. However, the reality is wherever we go in the world, including in the Muslim world, as it is in this picture, unfortunately, you have domination. Some has excessive as opposed to others. And therefore, in order to achieve certain justice, you have to do the transfer. However, this is of course a corrective mechanism, the transfer. Our objective is, rather than just opting for the corrective mechanisms, how endogenously through the objective function, a particular way of organizing society and organizing the resources can be possible, so that this inequality that we are seeing here can be overcome. And that is very much the Islamic economics, Islamic moral economy's position of the ihsan society, establishing that equilibrium in the society, so that the ones who have, the ones who have can share with the rest, so that the domination can be overcome. In other words, of course, the reality even is worse than what you can think of it, because quite large number of people, unfortunately, it is in the minus, not only on the surface, but it is in the minus, of course, with very huge dominations that we see around us. And therefore, we have to see how we can contribute to the betterment of lives by giving to the others. But main issue, of course, as we can see here, the main issue is the accessibility issue, as you can see on the right-hand side in this photograph. Yes, distribution creates certain equity in the middle. You overcome certain equality, and then perhaps with the equity, you give certain accessibility. But the whole issue, as you can see, without any barrier, how we can make our people to have accessibility to resources. And that is very much the development problem that we are talking, because development is very much related with accessibility, and that is the definition of Islamic moral economy's definition of development as well. How we can make people emancipated, how we can make people empowered so that they can have accessibility. What are those accessibility? Whatever the resources we have around us. Why? Because all those resources are created by Allah subhanahu wa ta'ala for everyone to have accessibility to enjoy them. By privatizing them, of course, we are giving the beneficent rights to people who have the private rights on those resources. And therefore, Islam has come up with the idea of zakat as a return to society, so that the rights of those people who have been excluded from those resources through privatization of those resources can have their share. So the accessibility is a major issue in front of us. And therefore, yes, transfer is good, it helps, it moderates the consequences of capitalism, but our objective is to empower individual by giving them accessibility. And this is very much the whole narrative or the story that I want to tell you in this session. In the next session, therefore, I will go around how Islam considered this, how Islam can be done, and hopefully within the given time, I should be able to provide some empirical evidence for you. So therefore, when we look at the emergence of Islamic economics, is very much within this political economy understanding how resource accessibilities can be possible, so that we can achieve individual empowerment. Of course, zakat, waqf type of institutions are important in terms of distribution, or the welfare state in the West is amazing in terms of moderating the consequences of capitalism and providing accessibility. However, our first objective is to create an environment in which people can have direct accessibilities rather than moderating the consequences through the Islamic means as well as through conventional means. And therefore, when we look at in the opinion of the founding fathers, they consider that an authentic and identity-defined Islamic economics and the institutions of such a system understanding in the form of Islamic banks and financial institutions can be an alternative way of reorganizing society so that the well-being of all the stakeholders can be achieved, not only human, but others. In other words, in the words of Polanyi, it's a rescuing process, rescuing human, rescuing land, environment, labor, and even the capital from the chains of capitalism, so that this emancipation can happen and development can be achieved as part of empowerment. And therefore, Islamic moral economy, or mostly as it is in Malaysia, we call Islamic economics, is a counter-hegemony. Counter-hegemony in response to the hegemonic domination of capitalism, with the idea of very much a double moment generating this new idea, new paradigm to create a counter-hegemony. And therefore within that, because this is our objective function now, any individual and any institution operating within this have to one way or another has to comply with the objective function and has to work, of course. And that's perhaps the distinction we are making. In other words, we cannot just say that banks and financial institutions are shareholder-based organizations, and therefore the maximum they can do CSR. But that will be entirely, again, Islamization of the institutional logic of the capitalism. But we are talking here endogenously institution being emerged from the normative structure of Islamic moral economy. They have to work within such an objective is the distinction we are making here. And therefore, looking at the whole debate around economy, finance, and in particular Islamic economics and finance, the debate between the very heavy professionals and Sharia scholars and then the moralists and economists is particularly different, because they would consider the issue of Islamic finance only moving capital from one place to another. As long as that is halal, that is finished, that's it. The story and narrative finishes. However, the moralist position, the substantivist position, no, that's not enough. We have to look into by moving capital, although it may be halal the way that you have moved, but what consequences it produces. Because through moving that capital in a halal way, you might still create domination. You can create accumulation as opposed to the Ihsani understanding. And therefore, what we see around us, all this conventional crisis, how the system that we have around us creates all this crisis that we have around us, the global financial crisis, the COVID crisis, and hopefully not, but there will be other crises in front of us. And therefore, what would be the whole objective of Islamic economics distinct, Islamic banking and finance distinct, as in the previous photograph, this lady asking, what is that authenticity in the Muslim way of doing banking that we can overcome such problems? When I was passing through in Belgium from one of the streets, I saw this financial institution, and they had this logo, this writing in front of on the facade of the building. And I thought this is what Islamic definition of Islamic finance should be. But unfortunately, I couldn't see such a definition on the websites of any Islamic banks or the publications of any Islamic bank, the art of protecting and financing people. And this is very much the emancipation and empowerment that we are referring to. A conventional institution can consider such a definition, but unfortunately, are Islamic banks. When we look at their mission and vision statements, they are very much on the efficiency side and respond to the market conditions. And therefore, we have to define what is finance. But when we look at the definitions, and people like Schiller, Nobel Prize winner, you would say that you cannot disembed finance from the objective of the society. Finance has to work within the objective of the society so that certain social goods can be produced, as he calls social good, what we call ihsan. In other words, finance by definition itself cannot be source of wealth creation, but it is only an instrument for wealth creation and distribution. However, in the current environment with the heavy financialization, finance is considered to be wealth creation process. So it creates so-called, but again, socioeconomic development is not there. So it only goes to the high earners and the capital owners, but unfortunately it doesn't go to the rest of the society. And therefore Schiller says finance is not and should not be merely a zero-sum game, but rather an adjunct to and a means towards a productive life. And that productive life, the social good we are referring to, or the Ihsani society, has to be the objective of any kind of finance that we consider as Islamic finance. Therefore, the debate, where is the Islamic finance in this social good, creation of the social good society or the Ihsani society? So the debate has been going on, a lot of debates on the Islamicity of Islamic finance, how Islamic finance is contributing, but suddenly we have found again a replication, source of replication in the form of sustainable development goals. While we were expecting that Islamic finance should provide the moral compass for capitalism to curb its excesses, somehow we are learning from global capitalism that we should be ethical in the form of sustainable development goals. Somehow Islamic finance could not rely on its own foundational base to generate this social good or the good society or the Ihsani society, but we have to again get the agenda from somewhere else, and then we have found the wisdom. We think that we have found the wisdom. However, of course, even sustainable development goals do not solve the problem because again, it doesn't question the initial equation. It does not question the role and position of capital. It just talks about how to curb the consequences of market liberalism. And therefore, we have to rationalize within this Islamic normativeness what we are talking. So when we talk about development, it's very much the accessibility to resources, as I mentioned, the resources that has been created by Allah subhanahu wa ta'ala. And within that, of course, you have two ontological positions. One is the religious-based ontologies, including Islam, and then you have the market economic capitalism. Religious ontology, and in particular Islam, would consider whatever we have around us is a privilege. It is given by Allah, and therefore you cannot exclude anyone from accessibility to resources, from accessing to the resources, and therefore everything that we have around us trust, and we have to respect those, and therefore establish a society based on mizan, or balance that Allah wants us. So this very much the privilege-oriented understanding. It's nima. What we have around us is a nima, and therefore is a privilege, and therefore whatever we have is that privilege. As a result of that, we have to share that privilege when we have, and hence contribute to socioeconomic development. As opposed to right-based understanding of a neoliberal capitalism or capitalism in general, which suggests that maximizing an efficiency. So that's entirely a different paradigm, of course. It's immediately maximizing my own at the expense of others. However, what we have seen, the natural law as well teaches us with COVID, as we have seen, if I want to be healthy, the other people have to be healthy as well. So therefore, this right-based understanding of a stoicistic understanding doesn't work anymore, as we have seen in the COVID case. So other people's health and well-being now is part of my well-being function. So natural law even demonstrates that we have to opt out this privileged understanding of the ontological ways of religions, and in particular Islam identifies about sharing resources as part of this paradigm of development. And therefore, when we look at, in order to constitute our development objective, when we look at iqtisad as a term in Arabic, that tells us the real meaning and the objective function, and that is very much directing things towards an objective, establishing a true path and in line with certain aim. It is very much qist, in terms of qist is the justice, just share, and justice. So therefore, when we look at all these meanings through iqtisad, it provides us entirely a different worldview. So our objective is the justice, establishing the equity in the society, establishing equilibrium through ihsan in the society. And why? Because it's a very much privilege-based understanding. And therefore, within this understanding, every civilization, every ontology has produced their own ways of organizing society. And in this organization, of course, they have determined their modes of production, their value theory, and their distribution theory. Unfortunately, time is an issue, so I'm passing. So different ways of organizing society, what we call social formation. Within that privilege, you have a different social formation. Within the right understanding, a different social formation. It directly determines how the resources to be organized in the society, and hence directly a development problem. And therefore, when we look at within the moral economy understanding, what we are referring is very much embeddedness. In other words, and therefore it goes why Islamic banking has to contribute to the ihsani society or the social good or the good society, is because the institutions that we generate has to be embedded into the value system of Islam. In other words, the institutions have to reflect the objective function of Islam, and therefore, rather than prices that determine everything, no, on the contrary, everything that we have should determine prices. And therefore, you are talking about an embedded society based on community, reciprocity, the fictitiousness, the commodification, collective action, mutuality, and etc. And therefore, a particular way of organizing a society in which the individual function is determined as falah and the societal function is determined as ihsan. A particular ways of organizing the society within this Islamic moral economy. And therefore, I have to be very quick, unfortunately. At the core of this one, what we see Tawheed, because Tawheed directly as the core of development objective in the society, it tells us complementarity and unitarity. And therefore, it suggests that all the stakeholders in the society, human, land, labor, capital, and etc., they complement each other, and therefore they have to work for the ihsani objective function as a development function, and therefore there is no domination. Domination cannot be acceptable because Mizan requires all the stakeholders to be in line. And therefore the importance of Adala and Ihsan as the social justice, the importance of Tazkiyah, that growth has to be in harmony with the growth needs of all the stakeholders. Rububiyyah suggested Allah has created everything and everyone with a development path as a fitra, and therefore that has to be fulfilled in the same way. And therefore, in order to ensure that certain minimum equilibrium can establish in the society, the right of the society has to be returned to society in the form of zakat as a fard. Individuals are given the responsibility to achieve that so that they can create the solidarity economy. The ukhuwa has to be established because Maqasid al-Sharia brings together the whole objective function that whatever we do, economic, financial activities, whatever we do has to be in line with the objective function, the well-being of all stakeholders as a development function. And therefore, what we have here, a particular understanding, a particular paradigm, how your economy has to work within the Tawhidic paradigm to essentialize the well-being of all the stakeholders that we have around us. And therefore, how Islamic finance is considered, Islamic banking and finance is considered to contribute to that process of empowering individual, functioning individual, and enabled individual, so that the individuals in the society with their dignity can fully function. And therefore, what we are talking about here, a particular paradigm, a paradigm of Islamic moral economy aimed at entirely a balanced development, socioeconomic development, by considering the interests of all the stakeholders that we have around us. In other words, yes, wealth creation is acceptable. There is nothing wrong with it. But that wealth creation has to be linked with the Ihsani society's objectives, so that the domination can be prevented and socioeconomic development can be achieved by establishing equilibrium in the society. In other words, those who have can contribute to the betterment and well-being of others. And therefore, oppressive exploitation, ecological imbalances, environmental disruptions that we have seen generated by capitalist economy cannot be acceptable within this paradigm. And therefore, what we are looking into, an elimination of poverty, social justice, redistribution through overcoming the domination of capital, the zakat, the right of the society should be returned, and the generously determined sustainable development, because Tazkiyah and Rububiyah suggest. In other words, an embedded society with the norms and values of Islam, that we can achieve economic development or socioeconomic development. And therefore, the outcome of this is very much a sharing economy, a collaborative economy, so that the Ihsani society can be achieved in the process. And therefore, out of this paradigm, how the institutions come and why Islamic banking has to work within such objective function. When we look at, for instance, the graph or the chart you have in front of you, it suggests that institutions should emerge within the normative world of each ontology. So Islamic ontology, therefore, will determine the values, and that will determine the norms, and those norms will determine the cognitive repertoire which exists in the society, and together they will determine roles, who has what, how, and who is capital, landowner, laborer, and etc. The roles have to be determined, and then the institutions will be an outcome of that process. In other words, Islamic banking, therefore, by definition of this emergence that you can see in front of you, by definition, therefore, has to work within the objective function. And of course, there will be distinctions from one part of Turkey and Malaysia, for instance, because the fields are different, capital is different, and habitus is different, but the norms remains the same. And therefore, has to work within the ontologically expressed values and norms to generate a particular institutional emergence with the objective function of realization of Maqasid al-Sharia, how therefore the value system of Islam determines through all these axioms that we are discussing with Tawheed, with Rububiyah and Tazkiyah, with other axioms constitute the emergence of institutions. So Islamic banks and financial institutions therefore cannot just say that, well, we are just following Sharia compliancy, the rest doesn't matter as long as we can transfer capital within such ontologically constituted institutional framework cannot be acceptable by definition. And therefore, we have to look into how this emancipation and empowerment leading to Ihsan can be achieved by referring to the Maqasid al-Sharia as part of the development objective that we are discussing. And therefore, time is an issue, but Imar, as Ibn Khaldun suggested, development is essential, but what is the important criteria of this development is justice. And therefore, when we look at the definition of Islamic economics, therefore, they would refer either justice, essentialization of justice, or the prevention of justice. And therefore, in your production function, in your modes of production, you cannot just have as in the capitalist production function, domination of capital, capital gets everything and the less goes to the labor, or in the Marxism, the other way around, but you need to have a particular production function, modes of production where everything and the society by the creation of Allah, because they are created by Allah, has to be a stakeholder, and each stakeholder goes to the equation, not through domination, but as independent, because empowerment has to happen. Each part, including human, environment, land, capital, each one of them has their share without domination by any one of them, and hence development can be achieved. So therefore, nowadays we talk about inclusive development, but the initial equation is not considered. And within, of course, therefore, we are defining Islamic banking and finance within this particular framework, which requires the centering finance, the centering capital, so that this Tawhidi understanding of complementarity can be achieved in the society, so that the finance cannot be the ultimate objective, but it is only a means to achieve the Islamic objective of ihsan in the end. And therefore, when we look at what we are talking about in Islamic finance, that is embedded into the value system of Islam, as well as working within the real economy, because within the objective function of emancipation and empowerment, working with the job creation, inclusive growth, disrupted businesses, sharing economy, commodification, no fictitiousness, risk sharing and profit and loss sharing, demand reduction, the materiality and the growth are important factors to rescue the land and environment. That discouraged because financialization, growth has to be provided, redistribution has to be there, and sustainability of human and other stakeholders has to be considered, and hence the importance of development. And therefore, the prohibition of riba is not to enable us to transfer capital from one place to another, but remove the hegemony of capital to bring it to the same level with other stakeholders in the process. Time is an issue, of course, and therefore profit and loss sharing other institutional forms have emerged within Islamic finance to respond. But what we have Islamic finance so far, unfortunately, what we see, unfortunately, capital is centered, and debt-based products are hegemonic. Profit and loss sharing and risk sharing is no longer happening. Heavy financialization in favor of capital happening. Fictitious commodities and commodification is taking place. Social responsibility is relegated to charity, and hence such problems we are facing in front of us. Just quickly share some tricks to justify what I have been saying. When we look at, for instance, the distribution of the financing by Islamic banks, what we see, financial sphere having the majority of the share from the Islamic banks. So the production sphere, the financing goes to the production sphere, much lesser than the financial sphere. And therefore, financialization is taking place. When we look at, for instance, the sectorial financing by Islamic banks, again, what we see, real estates and financial sectors and the consumer durables having the majority share at the expense of job creation-oriented value creation industries or the sectors such as manufacturing, agriculture, and etc. in all the countries. Then this is the story. And when we look at the distribution of financing in terms of the contracts, the Islamic financial contracts, again, what we see, debt-based contracts being very much hegemonic, as we can see around us. And this is unfortunately a reality that we have in front of us. When you look at, in the case of Malaysia, for instance, the heavy reliance of tawarruk. As you can see, data between 2014 and 2016, tawarruk has increased by 104%. Again, creating this embeddedness and financialization in the economy rather than development. Again, when we look at Islamic finance does not necessarily make markets stronger or safer, but entirely works in the same direction. I have two empirical studies here, but time is an issue. One of them is a 21 country case looking at a large number of Islamic banks, where we looked at how Islamic banking contributes to how it affects the Human Development Index in terms of as a proxy for socioeconomic development, Human Development Index. And these are the countries that we had in our sample. Turkey, Indonesia, Malaysia, Bangladesh, and etc. All those countries are included. We used unbalanced panel. We use, of course, the historical data, the summary statistics. If you look at here, for instance, dynamic panel system GMM, if you look at the highlighted area, credit by deposits, money banked to the private sector GDP, that's the Islamic banks, unfortunately, is not significant, again, in terms of affecting the human development. So most of the, when we look at the equations, the effect of Islamic banking is terribly limited, unfortunately. The second study, again, we looked at Sukuk as well as Islamic banks, large Sukuk data and Islamic banking data from 34 countries. In the case of Sukuk, and a number of indices, socioeconomic indices that we looked at, as you can hear, we see here 8 indices. These are the methodologies. A number of variables included in our equation. This is the equation that we had. Just to summarize the result, in the case of Islamic banks, in the case of Sukuk, we can see that certain positive impact on certain indices that we have, whether HDI index or the education index, gender development index, environmental index, Gini index. Sukuk has more positive impact compared to the others. However, Islamic banking, again, has very limited impact on the socioeconomic development. Time is an issue, therefore, unfortunately, I have to move on. I have another meeting here as well. And therefore, the result that we have in front of us, unfortunately, there is the limited contribution by Islamic banks and financial institutions in the empirical analysis, of course, very much verifies the graphs that I have shared with you. Because if the distribution of financing is following such a development path, it is hardly difficult to capture any positive impact or any significant impact from Islamic banks and financial institutions for development purposes. And therefore, what we are facing is, as Mohammed Bakr al-Sadr would say, that you cannot just have a partial analysis of looking at Islamic banks and financial institutions, not necessarily linked to the objective function of the society or in an embedded manner to the value system of Islam. So that this connection, unfortunately, Islamic banks and financial institutions only limiting themselves with the capital transfers doesn't have. And therefore, what we have in front of us very much rather than top-down ontology determining institutions, at the bottom up, the market system through its institutions grafting you, even redefining your value system. So unfortunately, Islamic banks and financial institutions therefore located themselves within very much the neoliberal discourse as part of this discourse of capital, and not necessarily working for the betterment of society. Of course, in recent years, what we have seen with the emergence of sustainable development, a large number of banks and financial institutions have moved to such a paradigm. Hopefully, it's a positive development, but again, it doesn't solve the problem at the core as Islam suggests. So therefore, what's the problem here? Of course, you have the Sharia compliancy, but you do not have the moral screening, the outcomes, how the outcomes are. So you can have your Sharia screening and you can have a halal financing or the Sharia compliant financing, but what consequences it produces through the moral screening process, unfortunately, that is not considered. The green areas here is not considered in the process. Therefore, a new turn, and this new turn, we have to consider how to make these institutions working in the larger objective function of society, that is development. Of course, the heavy financialization that is taking place in Islamic banking, it is a source of fear, and therefore there are these unexpected consequences. And that, as I mentioned in the beginning, rather than Islamic banking and finance being a moral compass for capitalism, unfortunately now through the SDGs, Islamic finance again is being redefined morally through the conventional system. And therefore, we have to look into the return to the original value system. And in the short run, therefore, certain institutions that we have working towards development objectives has to be important, but Islamic banks as well has to do certain shifts in their financing towards development objectives. And in addition to sustainable development, of course, is a new paradigm. But as I mentioned, my fear that it does not solve the question at the heart. It is just a redistributive mechanism. So we have to go beyond that. We have to look into the long run. In the long run, however, the institutions, such as in Malaysia, you have amazing regulative environment. That regulative environment has to respond to the creation of authentic institutions, rather than just copying and pasting the market requirements on top of on Islamic banks and financial institutions. This is essential for us to consider. Therefore, value-based intermediation that is initiated in Malaysia is a positive development, perhaps. In the short run, therefore, Islamic banks and financial institutions, we have to force them have direct investment and participation investment, equity-based structures, ethical underpinnings can be considered, how the unbankable can be reached out for the empowerment, contributing economic, social, and human well-being, impact investment, social investing, climate green investing can be done, and real economic connectivity can be achieved. I'm so sorry that I have run through, but these are important topics for us in terms of theoretical formulation, but at the same time, empirical data, unfortunately, doesn't support our position as such, that Islamic banks and financial institutions contribute to economic development. Therefore, we have this amazing potential here, but this potential has not been proactively utilized to contribute to development purposes. They have not been able to generate the outcomes that we are expecting. Therefore, it is very much a paralyzed force. And how, with new discourses and new ways of looking at how we can make a difference, hopefully. And programs such as this one and new generation of academics, professionals, hopefully we are praying that they will be able to make a distinction to bring this normativeness and institutional definition to Islamic banking and finance, and therefore the socioeconomic development within this privilege ontology can be achieved. And thank you very much. And my apologies for rushing through. I think that's all that I want to say. Thank you for your patience. Assalamu alaikum.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Prof. Mehmet, for a very inspiring speech. My apologies for the technical glitch that I had at my side earlier, and my thanks to Brother Hakan who moderated the session earlier. I believe the audience has gained so much from what has been delivered just now by Prof. And we have a question there. I'm not sure whether you have time, but I think
you have to. I would love to stay here and respond to questions, but I have been pestered. There's an important meeting that I have to chair.
It's okay,
and because of the delay, unfortunately, we couldn't manage that. Please do forgive me. But Hakan or Azize, if you could take those questions for me and their emails, I will make sure that I'll respond to them. You have to apologize me on this occasion.
Okay, it's okay, Prof. We have one question from Dr. Asma Abdurrahman, one of our organizers here, and I think the discussion would be done through other channel.
Yep, I'll try my best.
Okay, thank you, Prof. I believe the audience has gained so much from what has been mentioned and delivered by Prof. Mehmet. Many questions, I'm sure, are there, but we are out of time. And that I think would bring us to the end of the session. On behalf of the organizer, once again, I would like to express my utmost gratitude to Professor Mehmet Asute for being with us today, despite his very tight schedule. Jazakallahu khairal jaza. My apologies for any shortcomings during this session, and thank you everyone for your cooperation. Wabillahi taufiq wal hidayah. Assalamu alaikum warahmatullahi wabarakatuh.
Thank you very much for having me. I'm
Thank
really
you.
grateful.
Thank you, everyone.
I'm wishing you all the best.
Okay, back to you, Anis. Thank you.
Thank you to Mr. Azizi and Professor Dr. Mehmet Asutai for the keynote speech. Without any further ado, let's continue with our third session. Therefore, I would like to invite Assistant Professor Dr. Hamdi Chilingir. Please welcome Lutfen Bouire.
Thank you very much. Good afternoon, dear participants and my colleagues. It's so wonderful to have you all here in this afternoon session. I hope this Islamic economics webinar conducted with a collaboration of Sakarya Malaya universities would be very useful and fruitful. Thank you all for joining third session. Perhaps we can make a start without any delay. We have 5 dear speakers with very interesting titles in this session. First, I would like Professor Mustafa Çalışır to give us his speech. He is head of the Research Center for Islamic Economics and Finance at Sakarya University. Professor, the floor is yours, please.
Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, I want to thank to all organization committee and participation with contribute. I will talk about the development of the Turkish economy and future of the Islamic economics in the context of the global economic trends. Can I share my presentation? Okay. Today, if we're talking about the economic developments, first of all, we see that COVID-19 is at the top of the agenda. The rapid spread of the COVID-19 across the globe is taking a heavy economic toll on both advanced and emerging economies. Lockdown reduced consumption opportunities and creates supply side shocks as a large number of the business are not able to operate. The recession the global economy is facing in 2020 is deeper than what occurred during the 2008 financial crisis. As such, the forecast of the robust V-shaped recovery in 2021 is surrounded by high level of the uncertainty. According to some forecasts, 5% construction in 2020, global GDP followed by the robust 2020. The recovery depends on the development and administration of vaccine or alternatively a state of the world in which the effects of the social distancing on economic activities are largely overcome. According to some research, trade growth already aligned before pandemic has nosedived owing to supply and demand side pressure created by virus. In 2020, we expect global trade to shrink by about 15%. All advanced markets are affected to greater or lesser degree by 1990. In Eurozone, the worst of the pandemic seems to be over, but the region is still heading for historic recession in 2020. Sizable fiscal packages have been deployed to soften the blow. In the United States, the negative effects of the trade war with China will be compounded by the negative effects the lockdown. The economic decline is having a huge impact on employment and unemployment rate shooting dramatically. All major economies expect possibly China will face recession in 2020. The depth of the recession will be affected by the large differences between countries in regarding to where they are. Now, what is the development of the Turkish economy? When we talking about the Turkish economy, we can say this: the Ottoman Empire, which lasted over 600 years, had in the late 19th and early 20th centuries declined. As the empire employed over the course of the World War I, the Allies sought to establish their presence in Turkey as they did in vast switch of the Middle East and North Africa. The Republic of Turkey will celebrate its centenary in 2023. Its economic goal is to rank among the world's 10 biggest economies. To move from its current 17th position, Turkey will have to grow on average 8% per annum. The Republic of Turkey has had somewhat turbulent political and economic history. These are some milestone of the economic situation and to 16th years. After 1980, Turkey embarked on a process of the economic liberalization. Although this process in fits and starts, it made good progress towards removing price control, freeing foreign trade, relaxing capital controls, encouraging foreign direct investment, and expanding the private sector. As a result, foreign trade and foreign direct investment increased significantly, albeit from low levels, in particular the foreign direct investment. While Turkey is buoyed by recent developments, it is confident about the future. Though the United States and European remains by far Turkey's biggest market, many of the country's businesses are increasingly turning their attention to former Ottoman space, especially Middle East, North Africa region, but also Balkans and Caucasus. The rise of the Anatolian tigers has been driven by a surge in entrepreneurship and expansion into new markets. Turkey has distinct demographic and other advantages. The main driver for the success has been the dynamism of the economy. Illustrated by the recent high growth rates, a key feature of the Turkey is geographic position. Yes, there are some potential social and economic obstacles to achieving Turkey's goal. Crises are at the top of this. As the liberalization process in 1990s was not sufficiently supported by the surround macroeconomic policies and regulatory and institutional reforms. The economy suffered repeated crises in 1990s, the four episodes 1991, 4, even, and 1999. The last resulting partially from severe earthquake reflected a number of major weaknesses of the Turkish economy. In an attempt to stabilize the economy, Turkey entered the IMF standby arrangement in December 1999. Several attempts to stabilize the economy were undermined by political instability. Populist measures such as tax amnesties and repeated reduction in retirement age further weakened sustainability of the financial public expenditure. The boom boost cycle culminated in the 2000 and 2001 financial and economic crisis, which was the severe to today so much that at least triggered a wave of reform. Turkey's remarkable growth performance wouldn't have been possible without the successful macroeconomic stabilization implemented during 2000 to 2007. Annual growth rate 4.8%. The economy registered negative growth in 2009 as a sequence of the global financial crisis. The new AKP government managed to turn around the situation, leading the process with the ambitious provision program.
Professor, sorry, you have 3 minutes left.
3 minutes, okay. Turkey is important Islamic banking market and enjoys regulatory support, leading its Sharia compliant products releases and allowing the industry to stay competitive despite economic challenges. In addition to President Recep Tayyip Erdogan being vocal about the need to further develop Islamic finance in country. In Turkey, there are 4 types of bank according to Banking Regulatory Supervision Agency. Deposit banks, development and investment bank, participation banks, and banks under management of the saving deposit insurance. The participation bank industry, Turkey, is yet to mature and needs financial inclusion for the development of the banking sector. Considering this, a significant decision was taken by BRCA. Development and investment banks are allowed to provide financing with interest-free financial products, limited to resources they provide with interest-free methods. So, demand and supply side drivers, the Muslim demographic is one of the strongest demand side drivers for Islamic economic growth. In many countries, the demand for practical digital Islamic economy solution is gaining momentum, covering various sectors from Islamic finance and halal food to Islamic lifestyle products and services. With the rise of the ethical consume, many halal brands have attracted both Muslim and non-Muslim consumers. From halal organic brands such as Saffron Road and ethic macrofinance platforms such as Ethic Road and Blossom Finance. There is increasing government involvement in regulating and certifying halal products in Muslim majority countries. Intra-Muslim countries' trade is continuously growing, facilitating the development of the Islamic sectors. Islamic financing across the countries is also playing a division role. Searching for new economic growth areas, many countries, both Muslim majority and otherwise, are now seriously focusing on Islamic economy for Islamic diversification.
Professor,
Okay.
we
Thank
run
you.
out of time.
Thank you for my listen.
Thank you very much, Professor. Um, uh, Now, I should remember that we would not be able to take a question in this session because we have very limited time. Now, without any delay, I would like to turn to second speaker, Dr. Taqiyuddin Ibn Muhammad. He's going to present his presentation as titled Malaysia Islamic Banking Sector in the Era of Financial Technology, Current Issues and Challenges. The floor is yours, Dr. Taqiyuddin. Dr. Taqiyuddin, could you hear me?
Yeah, yes.
Oh, okay, the floor is yours, please.
Okay, Bismillahirrahmanirrahim.
Doctor, we have 12 minutes. Okay.
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala wabarakatuh. And good afternoon for everyone. Mr. MC, Assistant Professor Dr. Hamdi, the Honorable Associate Professor Dr. Siti Zubaidah, Deputy Director of Academy of Islamic Studies, University of Malaya, Dr. Fatih Savazan, Rector of Sakarya Universities, our invited speakers, distinguished guests from Sakarya Universities, lecturers, students, ladies and gentlemen. I'm very happy to have this chance to give my presentation. Before I start my speech, my name is Muhammad Taqiyuddin bin Muhammad, and today and this afternoon I will share my presentation about the Malaysia Islamic banking sector in the era of financial technology, issues and challenges. The objective are to identify the concept of fintech operation in the Islamic banking sector of Malaysia, and to know the issues and challenges of implementing the Islamic banking system of Malaysia. Okay, let's start. Let me introduce the outline first. My presentation will be given in 7 part. The first about the definition of fintech, key areas of fintech activities, segment of fintech, how fintech is different from Islamic fintech, application of fintech, and so on. I think different. Sorry, I want to change. No. Okay, this one. Okay, okay, this slide. Okay, about five part in my presentation, and the first part current issues and challenges of fintech, and then conclusions. Okay, let's move on the first parts on my presentation. What is fintech? The term fintech this defined as a financial technology and comprised of two words, finance and technology. In general, fintech is term accustomed to financial services, a company accustomed to financial service companies whose products or services are fabricated on technology, much resulting in highly innovative, disruptive, and pioneering services. In general, fintech adds another dimensions to finance industry and takes the industry to the next level. Okay. And I will talk about the key areas of fintech business activities and segment of fintech in the world, and especially in Malaysia. Fintech generally has 7 areas. The first one about the money transfer and payment, and the second one financial planning, and the third one investment, fourth one borrowing, lending, microfinance, insurance, charity, and chiropractics and cryptocurrencies and blockchain. And in the measure, when we talk about the fintech, fintech emerged in the 21st centuries. The term was initially applied the technology employed in the back-end system of established financial institutions. Since then, however, there has been a shift to more consumer-oriented services and therefore a more consumer-oriented definition. So, fintech now include different sectors and industries such as education, about the retail banking, fundraising, and non-profit and investment management, to name a few. Some of most activity areas of fintech innovation include revolve around the following areas. In Malaysia, there have 4 main segments on fintech, namely digital payment, P2P payment, digital finance, digital insurance, digital investment, and in Malaysia, fintech has been established since 2015, and its development was pioneered by the 3 largest banks in Malaysia. The interest in the fintech industry in Malaysia is growing at a fast pace, with also demand for a vibrant regulatory regime for the fintech stakeholders. There are main segment of fintech in Malaysia: digital payment, what I said before, digital finance, digital insurance, and digital investment. Like example, robo-advisor, low-cost trading platform, and so on. This one, from this, the central bank of the country in Malaysia, Bank Negara Malaysia or Central Bank of Malaysia, and capital market regulators, Securities Commission, SC, both have incorporated appropriate safeguard surrounding fintech players to maintain the overall safety and soundness of the financial system. That means the financial stability of banking sectors. Now we look at the numbers of Islamic fintech startup by the countries. We can make comparison between amongst the countries who applied Islamic fintech in their financial system. We look at Malaysia in the first stage, and the UK in the second stage, Indonesia in third stage, UAE and so on, and United States and India and Egypt. Now we look at Malaysia fintech map. We have what I said before, we have a lot of sectors that we can apply and implement the fintech, like a payment system, wallet system, currency exchange, lending, crowdfunding, comparison sites, insurtech, remittance, artificial intelligence, and so on. Now we want to differentiate how fintech is different from the Islamic fintech. This is an easy question for me and for all of you. Islamic fintech, that's mean the main point is Islamic fintech shares similar definition, but the main point of departure is that Sharia is Islamic law, specifically the branch dealing with transaction in the economy. Guideline must be observed in the letter. For example, fintech is permissible and accepted in Islam and only become impermissible if there is clear evidence that they are against the basic rule of the Sharia. It is noteworthy to highlight that from the Islamic perspective.
Doctor, you have 2 minutes left.
2 minutes. Business activities including fintech are deemed as a permissible except when there are clear texts which prohibited. Okay, we go to the issues of fintech, challenges and opportunities of fintech in Islamic banking sector in Malaysia. Amongst the issues, challenges of fintech in implementing the fintech in Islamic banking sector is one of these is fintech from the eyes of Sharia. The challenges that arise in the Islamic banking sector are in the term of compliance with Sharia compliant rules and guidelines. Addressing Sharia and fintech in the same breath may sound counterintuitive. And the question is whether Islamic banking could coexist with and benefit from the disruptiveness of fintech. The second one is inflexibility of traditional contracts. Traditional Islamic banking contract follow the principle of reverse six standards, whereby contract can be amended or terminated due to the unwanted and unexpected incident at any time, subject to agreement between the contracting parties. However, for example, smart contract, for example, in fintech are based on computer code and cannot be modified or cancelled once it is validated on the blockchain. And the third one is for example, smart contract, which is based on programming codes, is algorithm driven. It will also entail an understanding of the programming languages, which might not be feasible for contracting parties. And the third one about the regulation, about the regulations, fintech contract adoption related to fintech from a legal and regulatory point of view is still uncertain. For example, government agencies cannot comprehensively monitor and approve it. Contract execute over cyber world is another possible challenges, and the contracting parties could be from various countries, and in which legal authority it will fall will also be a possible challenge. And the next issues is lack of talents. Lack of talent means since the beginning of Islamic banking and finance in Malaysia, one of the major challenges in this industry is facing the issue of lack of skill talents. The fintech industry is bringing together information technologies, professional, data scientists, entrepreneurs, programmers, and etc. to the financial service industry. And the next issue is education of the general public. And in the context of human fintech implementation in Islamic banking, I think that's all for today for my presentation. about the challenges to implement Islamic fintech or fintech in Islamic banking sector in Islamic banking sector in Malaysia. That's all for today. Thank you.
Thank you very much, Dr. Taqiyuddin. Without any delay, let's move on to the next speaker. Next speaker is Mohd Shahid Noor. The title of presentation is Spaces for Sharia Discourse in Industry 4.0 discussion. The floor is yours, please.
Assalamu alaikum warahmatullahi wabarakatuh. Alhamdulillah, Allahumma salli ala Muhammad wa ala alihi wa ashabihi ajma'in. Distinguished professors, doctors, presenters, organizing committee, audiences, ladies and gentlemen. Today I would like to present my paper with the topic of spaces for Sharia discussion in IR 4.0 discourse. Okay, I'm trying to share my slide. Okay. Okay, introduction.
Okay, I think we have problem.
Okay, all right. You hear me?
Yes, now we can hear you.
Okay. Okay, thank you. Okay. Digitalization, accessibility to technology, and memory storing are main factors contributed in IR 4.0. Okay, as we know that when we are talking about Sharia, it's related to maqati Sharia, which is the mean is objective of Sharia, and qawaid al-fiqhiyah or Sharia legal maxim, and also usul fiqh. And when we are talking about Sharia, we sometimes must connect the discussion to this one of two things or all three things together. Okay, for IR 4.0, wait. Sorry. Okay, I hope you can see my slide. Okay. And then the issue in IR 4.0, okay, what I tried to divide into several items. First of all, I choosing cryptocurrency is one of the main problem in the economy. So what is actually Sharia issues that can be discussed in cryptocurrency? So among the issues are liability, value sources, manipulation that could happen, and also security, volatility, and horror. And also we can discuss from the view of Sharia about maslahah, mafsadah, saddu zara'i, and any studies related to the qawaid fiqhiyah or also maqasid al-Sharia. And for instance, I can give some example for the part or the field that we can explore Sharia discussion on the particular item. For example, asset pricing. In cryptocurrency, for example, we have, I think, more than 4,000 cryptos in the market today. So how they price the asset? If we consider the asset as a zakatable asset, what is the benchmark? We want to benchmark the market or the price of the asset so we can calculate the nisab of the asset to pay the zakat. So that's among the issue that could be explored in the study of cryptocurrency, which is one of the items that emerged in IR 4.0. And then we go next. robo-advisor. I think Dr. Taqiyuddin have said about robo-advisor. Now today we can see there's many economic industry that start to invent robo-advisor, Betterment, Wealthfront, Vanguard, Digital Advisor. Everything is in Europe and US. They start to develop robo-advisor in order to help economic industry or industry in making machine and everything. Replacement of Roman jobs by robotic tools is not a new phenomenon today, but it's required in some sectors in order to optimize the productivity, at the same time to minimize the cost of production. Making decision process in an area assisted by robo-advisor, for example, white investment that use the robo to arrange portfolio in the investment. Okay, today we start to talking about robo-advisor, and there is some number of company that start to use robo-advisor as advisor in terms of investment portfolio and others. And now we also hear that there is maybe one day there are robo-advisor will advise in terms of Sharia matters, Sharia compliant and everything. So what is our readiness in order to face all this change that could be happen in IR 4.0? Okay, and next about artificial intelligence is the most important component in today's industrial revolution surrounding. The potential in improving industrial sectors such as automotive industry and other sectors like law firm by data owning analysis is seem brighter and essential for them. AI not only expected could perform the tasks and jobs, but it may going faster and smarter compared to the human being. When something does better than human, many of human roles will be replaced by this smart technological innovation, and definitely it might trigger many challenge issues. Until today, you can see, for example, digital banking. Digital banking, even though we are now know about fintech, digital banking, they are still relying on the human contribution in order to create or to arrange the document and others. I can say, how about we can make some example? We are using trade financing, for example, where trade financing is allowed between bank, exporter and importer to connect each other in order to facilitate the industry to import and export the items. And there are also AI helping in facilitating the trade financing using the blockchain, smart contract, and for sure AI involved in that. So when they are using AI or AI, artificial intelligence, they could manage the relationship in trade financing very well compared to human being. But there are also some operational issues could be happen even when the human being managing this item. Also, there will be issue. They will trigger some operational issues in the particular relationship or in particular business. Next, we are talking about big data. According to International Data Corporation, IDC defined the big data technologies as a new generation of technologies and architectures designed to economically extract value from very large volume of a wide variety of data by enabling high velocity capture, discovery, and analysis. So this is a big data. Today, big data, I think is not so strange for us. I think we always using the big data, even in our handphone, in our data storage, we are using big data. But big data also, they can be analyzed and they can produce another data, which is could help human being. So this kind of data or this kind of analyzed data could help, could utilize for zakat management, finance and economy, help the administration of Islamic organization, planning, executing and monitoring process and education specifically that related to Sharia sciences as well as fiqh. So when we are talking today about big data, it also can contribute to the establishment of the fiqh, establishment of the Islamic law, but there are also issue could be happen there. So that's the new era, the new area or industry or field that could be explored and also could be trigger us how to communicate with the issue that will be coming maybe soon or sooner. And then for the conclusion, I think my time is limited. Okay, so The conclusion, impacts of IR 4.0 in all industries over the world are inevitable. Connecting with stable networking incorporated with other supportive technological machines and software makes the process faster. Therefore, readiness of Sharia body, okay, for us, Sharia body, or knowledge of knowledge must be prepared properly in embracing new era of millennium, that where machines and human innovation are expecting to replace many of human functions. Integration between Sharia and technology should be embedded together in research and study with purpose of demystifying the phenomenon before deciding Sharia views and stance. That's only my conclusion for my paper. Thank you for your patience and listening. Thank you. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much, Doctor. Now, let's move on to the next speaker. Next speaker is Ismail Bektaş with the title Modernization of Cash Waqfs Model Proposals. Ismail, could you hear me?
Yes.
Okay, the floor is yours.
Thank you, Dr. Hamdi. First of all, I would like to thank those who contributed to the conference from both universities and giving me the opportunity for presentation. Also, I hope that the conference is useful and beneficial for everyone, inshallah. The topic of my presentation is modernization of cash waqfs model proposals. First of all, I would like to outline the presentation. My presentation is divided into three main parts. Firstly, I will briefly mention the historical aspect of cash waqfs and a few basic points on the subject. Following that, I would like to continue with featured model proposals in the literature. And finally, I will conclude my presentation by summarizing the most important points of the subject. Now we can start mentioning about the description and history of cash waqfs. Historically speaking, the institution of cash waqf has played a significant role throughout Islamic history, from the time of Prophet Muhammad sallallahu alaihi wasallam to the beginning of 19th century. These cash waqfs were approved by the Ottoman scholars as early as the beginning of 15th century, and by the end of 16th, they had become extremely popular all over the Anatolia and European provinces of the empire. Arab and African provinces were one step behind in practicing the cash waqf system for some reasons. In the Islamic world, from the 18th until the 15th century, there is a huge gap of knowledge concerning the history of cash waqf. Although the reason for this gap is not clear yet, it seems highly possible that the archive records have not reached the present day. According to reached Ottoman court records, the first cash waqf is the first cash waqf in the Ottoman Empire, established at 1493, and they continued to exist until the early 19th century. The fact that the cash waqfs had survived as they are for almost 500 years is a sign of success of this system and its sustainability. Like other scholars of the Islamic civilization, Ottoman scholars have discussed the legitimacy of cash waqf system too. Just for the detailed information, who needs, I wanted to show briefly the opinions of Ottoman scholars. For example, Ibn Kemal, Ebu Suud Effendi, and Bali Effendi supported, and Çivizade and Birgivi opposed the cash waqf system. Cash waqfs were fully allowed by Ottoman Empire after the fatwa gave by Ebu Suud Effendi. As for the methods of operating the capital of cash waqfs, in the light of examined Ottoman accounting records, it is determined that Muamele-i Şer'iye, which is in its origin Murabaha and Baybil Istiglal, are the two common methods for cash works to operate their cash capital. Besides that, Waqfs rent their real estates generally using Ijaratain, Ijara-i Wahide or Mukata methods, and as a result, obtained rental income from the transactions. That's all I wanted to say briefly about the history of Ottoman cash works. At this point, I would like to clarify an important issue. In Turkish literature concerning the subject, the cash vakf is perceived as a historical institution. So in the current juristic usage, all types of cash vakfs are accepted as other vakfs. I mean, without saying the word cash. Therefore, Turkish literature uses the term modernization because we are talking about a historical institution. But this situation does not apply to other countries like Malaysia and Indonesia and other countries. Before mentioning the model proposals, I would like you to know that I cannot go into the details of each model proposal due to the time limitation. And now I would like to move on to model proposals. As is known by all, the implementation of cash vakf has attracted many researchers' attention to consider the potential and influences of this method of finance. Recently, the revival of the institution of vakf took a movable form, especially in terms of the creation of cash vakf, which found its ways as one of the financial institutions financing different goods and services in the different countries. As a result of this, the literature concerning the cash vakf model proposals has expanded day by day. When we look at the model proposals suggested for cash vakfs, we find two main ways followed by the researchers. One is focusing on cash operating ways like Murabaha and Mudaraba, and modernization of these methods, or combining them with other institutions like Zeka or Card Hasan. And the other way is focusing on the area that financed by the cash vakf. Concerning the first way, there are many of models that combines the cash vakf with the venture capital system. In my opinion, Murat Çizakça's model proposal in this regard are worth to mention. In this model proposal, it is envisaged that two powerful Islamic financial institutions, the cash vakf and Mudaraba, need to be combined. Let us now envisage the cash vakfs can be combined with venture capital. Assume that person A wishes to establish a cash vakf with his savings. The purpose of this vakf would be to help finance entrepreneurs who wishes to establish their own businesses. The founder of the vakf A approaches a venture capital company and informs them of his intention. Then he deposits his savings with the venture capital company, which constitutes the capital of this cash vakf. The venture capital company would then sign a mudaraba contract with the vakf, thus becoming in reality it is mudarib. When it comes to the transfer of vakf funds to the entrepreneurs, the venture capital company also agrees that the capital of the vakf would be invested solely in the mudaraba or musharaka partnerships, thus eliminating all doubts about the legitimacy of this investment from the Islamic point of view. Structurally speaking, this would be a triple mudaraba with three parties involved: the vakf, the venture capital company, and the entrepreneur. Çizakça claims that cash vakfs could solve the most serious problem faced by the venture capital system, which is shortage of long-term capital. Here we can also mention the model proposals that combines cash vakfs with the microfinancial practices, partially linked to the venture capital. According to some researchers, especially as far as I see, Malaysian and Indonesian says that cash waqf is a very reliable source for microcredit and microfinancing. It is a very strong source for the medium-sized enterprises and entrepreneurship. The cash waqf can contribute to the improvement of the performance of the industry through the assistance provided to the SMEs. Cash waqf can create more project business opportunities and more employment, which contribute to the economic growth and the financial system. Cash waqf can enhance the accessibility of microfinance institutions to access financial markets. There are also some practices based on Qard Hasan, which is another method. As an example of Qard Hasan cash waqf, I can mention with ICSAR. My colleague Alican also presented details of this waqf. It is a good thing, I think. Thank you.
You have 3 minutes.
It is a good example of, I think, a modern cash waqf. The third model I would like to mention is e-cash waqfs. E-cash waqfs lately increases the collection of waqf electronically, motivate existing internet banking users to contribute to cash waqf activities. Moreover, enabling the collectors to make more funds to be invested to serve the development of Ummah. Regarding the second way that I mentioned above, there are many areas suggested for cash waqfs to operate. The most mentioned areas for cash waqfs are education, poverty alleviation, socioeconomic developments, health, and other areas. Some researchers design a new cash waqf model for education financing through cash waqf bank. Cash waqf bank can be entrusted to with cash waqf and collecting it from public and channel it for education purposes. The second main area that researchers mentions is poverty alleviation for needy people. Most of the research studies indicated directly or indirectly that waqf could be considered among the effective method to alleviate poverty due to its sustainability. And there are many areas for cash waqfs to operate, like health and socioeconomic development, but I have no enough time to go into details. To briefly touch on other models suggested in the literature, I can give 6 model proposals, 4 model proposals: Waqf share model, deposit cash waqf model, corporate cash waqf model, cooperative cash model. Before I conclude my presentation, I would like to give some general ideas concerning the modernization of cash waqfs. In my opinion, re-establishment and modernization of the waqf system, especially cash waqf system, should be considered as a vital step in the struggle to eliminate riba. It also achieves another modern economic goal, a better distribution of income in the economy. A waqf reform in modern Islamic world should not aim at transforming small family-owned lands into waqf-held agricultural estates, but concentrate instead on cash awqaf, where the real potential lies. That brings me to the end of my presentation. I hope you are a little clearer on the subject. Thanks for listening.
Thank you very much, Ismail. Now I would like to turn to Dr. Noor Aine Binti Ali. with her title, Empowering Zaka Recipients Through Productive Disbursement in Achieving Sustainable Development Goals. Dr. Noor Aini, the floor is yours, please.
Yeah, thank you, Mr. Moderator, Assistant Professor Dr. Hamdi. A very good evening and afternoon for all participants and the presenter. The Malaysia is a prayer time, so I will make a short presentation entitled "Empowering Zakat Recipients Through Productive Disbursement in Achieving Sustainable Development Goals." So this is my presentation outline. Start with introduction and end with the conclusion part. Okay, for the introduction, as we know, zakat is the third pillar of Islam. That we believe that zakat can reduce social problems such as elevating poverty and reduce income gap in society. So in Malaysia, zakat distributed in two forms, namely the consumption and the productive distribution. Because the zakat aim is to elevation poverty, that zakat is in line with sustainable development goal introduced by United Nations Development Program that consists 17 development goal. There is a picture here. Then when the sustainable goals is in line with zakat, in SDG 1 is eradicating poverty and reduce inequality. And my focus on the research in two SDG only, because the research is only progressing. So for the literature, I will conclude that the previous literature proved that zakat for productive purpose has more advantages than the consumptive purpose, and the literature found that zakat can play an important role to meeting sustainable development goal related to poverty, hunger, quality education, economic growth, and the gap of inequality. So my research used the semi-structured interview. I interview three zakat institutions represent the zakat management institution in Malaysia. This is fully corporate, namely institution A, semi-corporate, namely institution B, and the third management institution in Malaysia is Islamic Religious Council, namely institution C. That is, I interview 2 to 4 informants to get the data from the zakat institution. So for analysis, I use a thematic analysis for the analysis. Okay, let's go to the discussion and finding. So from the table 1, this is a productive zakat disbursement statistic. In table 1, we know that in 2014 to 2018, zakat contribute, the zakat institution contribute a certain amount to the productive zakat. As for example, institution A contribute 11.5 million Malaysian ringgit in 2018. The other rest, institution B and C also contributed to the productive zakat disbursement. As compared to the other institution, institution A has recorded highest amount of the productive disbursement in 5 years. And for based on the proportion of the productive distribution from total disbursement, it is found that institution C has exceeded the rest because institution C is Islamic Religious Council. So the the collection of zakat is not as much as institution A and B, because institution A and B is the corporate and semi-corporate institution. So the other findings show that the top productive disbursement has been merely between 0.1% to 3.5% in the total of the disbursement. So it's conclude that not much disbursement give to the productive zakat. Okay, let's go to the productive scheme in zakat disbursement in 3 institutions. So the first one is financial assistance. That is financial assistance divided by 2, initial funding and the additional capital. So for the initial funding, the zakat institution give $5,000 or less for eligible asnaf who already have a running business. So the recipient of zakat can eligible for this initial funding only for asnaf or recipient that has a business. So when we have the asnaf not a business, they can get the initial funding. So the second one is the additional capital. So additional capital give to the asnaf who have potential to be totally free from the poverty. The zakat recipient will be given additional business support for the asnaf or recipient. So the 3 institutions of zakat promote, introduce the different program to the zakat recipient. As for example, institution A promoting few business projects such as a bidan, Blue Fabric, mobile entrepreneur, and also the Ramadan Bazaar. We collaborate with Teras Niam Berhad. Otherwise, it is a B, promote a Jaya entrepreneurial program and the program Tunas Usahawan Belia Bumi Putra. That is collaborate with SME Corporation Malaysia. So the other institution C, introduce asnaf economic empowerment program and the asnaf human empowerment program. So these all the program can give the asnaf additional income rather than the zakat funding from the zakat institution. Okay, the second I don't know where I can take to this next slide. So the second one is the non-financial aid. So non-financial aid give the asnaf vehicle or the equipment to the asnaf. The institution A and B give the asnaf vehicle and the deposit for the asnaf to get the vehicle for the taxi and others vehicle. So that okay, the third one is the training. So the zakat institution also introduce training for the recipient. So for example, institution A with the serving workshop to the asnaf and the recipient to produce uniform and training center for the asnaf to get more income from the training. Okay, the institution B organize halal certificate seminar, collaboration with the Islamic Government Malaysia, and also introduce serving and cooking workshop for the recipient. Other institution is give the asnaf skill training scheme as a pass-through training scheme and also the heavy machinery scheme to the ASNAF. So all the productive scheme in 3 institutions in Malaysia give ASNAF to get more income from the business and the training that they open or they participate. Okay, for
Doctor, you
this
have
is the achievement of the productive disbursement.
Doctor, you have 2 minutes left.
Okay, and only 2 slides only. So for the achievement of productive disbursement, there is institution A and B have managed to have 80% and 70% of the participation ASNAF to be out of poverty respectively. So the achievement is higher, but institution managed to remove 83% of ASNAF from the poverty in the ASNAF Economic Empowerment Program and the ASNAF Human Empowerment Program. So the achievement is higher, higher 80% and above. In addition, the training scheme has also successfully helped 90% of the enrollee ASNAF to be employed in their chosen field. Then the success of the Zakat institution has proved that SDG can be achieved through Zakat productive disbursement. In conclusion part, I conclude that the productive disbursement by study by Zakat institution has shown that they can help the fulfillment of SDG 1 and SDG 10. This is eradicate extreme poverty and reduce income inequality. This achievement hence can be enhanced by increasing the number of recipients who participate in the scheme and the program provided for them. Because the participant in this program only between 100 to 300 only. So the poor is higher than that. So in addition, the Zakat institution should improve their monitoring system as to ensure that the recipient will follow any advice and plan given to them. So Zakat institution have monitoring the recipient to get move from the poverty. So that's all for me. Thank you for your attention.
Thank you very much, Doctor. I would like to give my special thanks to all dear speakers of this session, as well as to the participants. We run out of our time, so we should close the session. Unfortunately, we couldn't take questions in this session because of the limited time. Now, I think we have right after this session we have session. Thank you very much.
Tashakkur Adarim to Assistant Professor Dr. Hamdi Chilingit and all the panel for the valuable talks and knowledge. Now that we have almost completed today's event, I would like to invite Associate Professor Dr. Asma bintu Abdul Rahman, Head Department of the Shariah and Economics, University of Malaya, to give her closing remarks. Please welcome.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala wabarakatuh. Alhamdulillah, we come to the end of our webinar today. It is Maghrib time here in Malaysia, okay? And this webinar is actually the manifestation of, I think during my visit in Sakarya University, especially in ISIFAM, I've been thinking of having this long-lasting collaboration between Department of Sharia and Economics and ISIFAM Sakarya University Whereas I'm so impressed looking that the member of ISIFAM, they are showing their passion and their commitment in terms of making Islamic economy and finance spread and being accepted in Turkey. I also would like to express my gratitude and appreciation to the management of University of Malaya, Academy of Islamic Studies, and also ISIFAM and Sakarya University for supporting our webinar today. And I also want to express my thanks to Prof. Mehmet Asute, who can spend his valuable time despite of his tight schedule to deliver his keynote speech to us today. And thank you also to the Imam of the Hagia Sophia Mosque. We are so fortunate to have him and have the privilege of listening to his reciting Al-Quran today. And my sincere appreciation also goes to the moderators, Dr. Zaidi, Prof. Dr. Shakir Gormosh, Assistant Professor Dr. Hamdi, Ustaz Azizi, for your contribution in moderating our webinar sessions today. And also special thanks to our MC of the day, Ms. Anizatul Atira. And Chok Tashakur Ejirim, okay, to all the presenters for today's webinar. Without your hard work, there will be no webinar to be organized. Okay. And all organizing committee, including our student from Department of Sharia and Economics and ISIFAM, Sakarya University, for your dedication and commitment in making today's webinar successful. Thanks also goes to our participants who can make their time, okay, from the beginning until the end of our webinar. So with the end of our webinars today, I hope it will be the starting point of having more academic activities and collaboration in the future. With the success of our today's webinar, I believe many webinars can be organized in the future using the same method. But of course, we are looking forward with the permission of Allah to meet each other in person, inshallah, either in Malaysia or in Turkey, so that we can enjoy the baklava or nasi lemak. Okay. So inshallah, we will collaborate to do research and publication, co-supervision if possible in the future. And with that, I think I would like to end my speech. And again, tasyakur dilim. Terima kasih banyak Guru Syurus, and jumpa lagi. Assalamualaikum warahmatullahi wabarakatuh.
Thank you to Associate Professor Dr. Asma Abdul Rahman for the speech. Next, I welcome Research Assistant Hakan Aslan, Vice Director ISIFAM, Sakarya University, to give his closing speech. Please welcome.
Assalamu alaikum. I would like to thank all the participants from Malaysia and Turkey. Also, we even have some other participants from other countries like from Indonesia, Pakistan, and Prof. Mehmet Asutai for his keynote speech. I actually thank Prof. Asmak Abdurrahman for actually, she made my speech easier to thank all the participants one by one. So I just don't want to repeat all the contributors, organizing committee, advisory committee, and the supporters of the conference, and all the students spend efforts for the preparing this conference. I don't want to say one by one again. So in behalf of them, I want to thank for University of Malaya Department of Sharia and Economics, and I would like to thank our directors, Mustafa Çalışan, and our rector, Fatih Savaşan, for supporting our research center, for allowing us to preparing this kind of international conferences. And I just want to add just a few more things. Today we discuss many different topics of the Islamic finance and different kind of institutions like Islamic banks, Takaful, Cashbox, Al-Rahna implication in Malaysia, and Zakat, Zakat for Malaysia, and Islamic social finance. So we learn from each other. So we learn some experience from the Malaysia, and I hope that our Malaysian colleagues learn from our experiences as well. And inshallah, this this first big webinar will lead us to another conferences and another collaborations. I hope in the future we can do more publications and collaborative projects and so on. Also, I want to thank Prof. Mehmet Asutai for his keynote speech. He mentioned very important points about development of Islamic finance and whether it had helped for the social economic development, and also indicated in his speech the recent initiatives, like if I'm not wrong, 1 or 2 years ago, Malaysia started value-based intermediation, which is we start to learn about like Islamic finance, just not about the Islamic way of capitalism. So we have the values inside the Islamic finance, and we need to keep those values. And I want to remind that at the end. So I would like to thank for everyone again, for all the participants, presenters, and contributors. This is end of my speech. Assalamu alaikum. So maybe if everyone, all the participants at the moment can open the cameras, so maybe we can have the photo together. Can we all open the cameras, all the participants, if possible, please? So I guess all the photos are taken. If taken of both sides, it's a bit different progress. I want to end the program here. Assalamu alaikum to all.